Like
Yeah.
Monday Night Football.
Monday Night Football.
Oh,
Exactly.
for it.
Yeah, same start time too. But
Yeah. But no, with that being said, we can go ahead and jump into the Tasty platform here. We'll do a little tour to market, see what's been going on. Market's been selling off on the day, as you can see here. And then also we have volatility expanding a little bit more. And then another link that Gus had sent me this morning was the headline with the Iranian attack in the Strait of Hormuz. Am I saying that right?
Hormuz.
Hormuz.
Yeah.
There we go. Every time
I hear some people leave that H off and go Ormuz as well.
Nobody's corrected me. They've always looked at me kind of funny every time I said it. So
I did have to look up this pronunciation and make a TikTok some time ago. Yeah, because I knew people would obliterate me in the comments if I dared to pronounce this word wrong. Yeah, exactly. Yeah, could work, but no. Hormuz is correct. Yeah.
Hormuz, the Strait of Hormuz. So another Iranian attack causing oil to catch a bid on the day. And I mean, it's a long time coming because we've seen a lot of downside action on the overall oil market for quite some time now, especially after the significant rally that we put in. And if we zoom out to a larger time frame chart, you can see exactly what we're talking about here. So as we consolidated down here at the lows, I mean, it felt like watching paint dry a little bit here. We got long a little bit early in our position. Let me go to /MCL, the smaller oil product there. But we had gotten long into one of these positions here. And now that we're catching a bit to the upside, it makes us feel a little bit more comfortable. Unfortunately, for some of the positions that we have on in the USO product, is still down a pretty significant amount. We had purchased a 110 call expiring July 17th for oil. And then we sold an out-of-the-money put spread, $5 wide. We collected about $1.70 on order entry there. So these positions are down. They got a little bit more time under its belt. If we continue to catch a bid on USO, we should see some better upside action, I guess, for lack of a better way to put it. We'll see what happens there. But able to take advantage of the MCL futures contract there. That's nice. That's kind of hedging this USO position a little bit more. And if we make new lows in the oil market, I'm going to go ahead and cut this position. So if we make new lows, I don't want to continue to catch a falling knife that it's kind of felt like I was catching just for a little bit there. But we're going to hold on to that one a little bit longer. And then with some of the downside action, apparently the US losing was bearish for the overall market because literally right after the game was done, the market continued to sell off lower. Obviously, I'm joking, but the market continued to sell off a little bit lower. Was able to get some more opportunities off of some of the levels of value that we had marked off over here on NASDAQ that we'll get a little bit more into as I accidentally move this. This should be at 29,900 for the value area high. But we were getting short somewhere up here. Market was looking pretty weak. So I was like, you know what? We'll probably step inside this level of value. If we would have made new highs, I would have cut the position. But we ended up selling off a little bit lower, attacking these lows that's sitting inside that level of value there. We had also purchased a QQQ put yesterday as well, just seeing some of the weakness in the market. The market could have continued higher, but another thing that we were paying attention to was this kind of swing high that, I got to go back to QQQ, was this swing high that we were sitting inside of right over here. So if we draw this price line over here, this was really what we were paying attention to because although we got that rally to the upside, we just wanted to see which way the market was going to break, to the upside or downside, because you can kind of see that range that we're sitting in. And then we also purchased a QQQ put, but I took that off at the open and I could almost kick myself because it feels like I missed the meat of the move. And that's those natural emotions. You catch a good piece of the market and then you always feel like you missed out on a little bit more. But I took it off at open and the market continued to sell off lower, taking out last Thursday's swing low. So putting a little bit more fear in the market, volatility expanding a little bit more there, but that's what we were looking at. I have no more short positions on the market as of now, just because this was a pretty steep move. And again, even if we do zoom out there, we were trading at these levels at the beginning of next week. So who knows? By the end of this week, we could be back at the highs. But that's what we did over here in the portfolio. And then SPX or SpaceX. I'm sorry, SpaceX. SpaceX has been very lackluster, just kind of sitting on that position, letting it ride for a little bit, but trying to collect some theta on the way. It is an out of the money put spread that we sold, so it's nice. It's a premium position, but it's a little bit boring on my end, guys.
Yeah, maybe we got to start calling this Space Exploration Technologies Corp to really, keep the two separated. Because I also do the SPX SpaceX confusion a lot. Yeah,
100%. I think we got to do that.
SPX. Yeah, Space Explorations Technologies Corp.
What Gus said.
That's what we'll be calling this for moving forward. Remind me what your strategy was in USO.
Oh, USO. It was very similar to just the market had been a little bit oversold to the downside, so wanted to get long there. USO was one that I had gotten on a little bit earlier. Whenever we continued to sell off lower and lower and lower, I recognized I was early on these positions. So then that's why I felt confident to take the oil futures contract because I recognized I was so early on the USO positions. But that was pretty much the entire idea.
Sure. So you went for, that's basically just it's a what, 105, 110
it's a
put spread with a 110 call just on top of it for good measure?
Yeah,
I think sprinkle of sugar?
Yeah, it was actually, that out of the money call was added, I think maybe 2 or 3 days later. So it wasn't necessarily, it's all one position, but it wasn't on order entry.
No, yeah, I have lots like that.
Yeah.
I'm short Rivian against my long Rivian.
Yeah, no,
right
exactly.
Now.
Yeah. You kind of have individual positions on that one overall position.
Yeah. Yeah, and I do that a lot too, and kind of attack different things differently, and then you gotta every time you pull this up, you gotta like piece them apart. And think, okay, well, what was my thesis here, and what was my thesis there? How should I manage this? Yeah,
and a little bit of the thought process behind selling the added money put spread, and then also buying that call was if we were to get that initial pop in oil, it would have been nice to take advantage of that directional move with buying that cheaper contract and not selling it. And it's like we could have then just taken the call off and then let the added money put spread ride because it benefits from data decay over.
Well, yeah, I was going to say, I mean, it's basically like a synthetic 2x1. You just don't have to post up the $2,000 of buying power lever. It would be to sell an extra one of those 110 puts. That makes sense.
Yeah. But yeah, no, that's what we had going on today. I'm glad that oil again is getting a little bit of a bid because it was getting a little quiet. And when things get quiet, I don't know how I feel about that. Like, are we going to put in another leg to the downside after we load up more positions here, or are we going to finally get that pop that we're looking for? But it's looking like we're getting that pop. If we can trade at around 71, 70 on oil, I'll get out of this position. This one's going to be a boomer bust. If we make a new low, then I'll use my stop loss. I think right now I'm long. I'm not sure why it's not showing the order, but I'm long at about 67.89, I believe. So if we make a new low in the market, I'm gonna get out of that one just because these futures contracts can get pretty aggressive against you. It's not gonna expire in my account. It's gonna keep pulling that account down until you manage it. So
yeah, oil definitely a larger downward bias right now too. We're catching the little jump here, but yeah, don't want to take your eyes off that one for too long. Exactly.
What's going on? What's been going on in your backyard? As I know you're getting to some of those comments there.
Oh yeah, I was just gonna pop off some of the chat here. What's going on, everybody in chat? E-Media, Big Deal, Theta Trader, Grumpy Mike. Good to see all of you. Lots of Ted Lasso references happening. I see Big Deal missed one. I would have missed it too. I haven't seen Ted Lasso though. I hear it's very good. Perhaps.
Dare I say, who is Ted Lasso?
Oh really?
Before I get absolutely roasted in the comments.
No, this isn't some like iconic like 80s thing or whatever. It's just Ted Lasso. It's a show on Netflix or I don't know, one of the streaming services. Somebody can let me know. But it's a recent show about a fictional soccer team or is it about Wrexham? Is it about a real soccer team and the show is just fictional?
It's giving me Lazy Town vibe. You know what I'm talking about?
Sure, yeah, I could see that.
Just off the first image that I see right
there. Yeah, no, it's just it's like a drama comedy about a American guy who has to go coach a European football team. Okay. And it's like it's the whole
Does he do a good job?
Arc. Apple TV. Yes. Thank you, Mr. Pillows.
That sounds like that's quite the stretch. Does he do a good job as an American coach?
I think so. I think that's the whole thing. And I might be speaking out of turn here. Somebody can correct me if I'm wrong. Like I said, I haven't seen the show, but I think it's like he takes like an American sports mentality to them and like he's like talking in like basketball terms and stuff. I don't know. I might be totally out of line here. Like I said, everything with a grain of salt. Wrexham. I know Wrexham is a real team, but is Wrexham the team in Ted Lasso, or am I mixing that up? Is it a fictitious team in Ted Lasso? I'm not sure. But yeah, it's good. You'd probably enjoy it. A good soccer show.
It's on Netflix.
Yeah, it's Apple TV.
Oh, all right. No more. Apple TV is a sleeper. They actually
they have been stepping it up. Yeah, they do have some good stuff.
What's been in your backyard? You were talking about Rivian the other day.
Yes,
on its butt. You were talking about that channel that it typically trades in and how it usually behaves.
Indeed, yes. I would be remiss if I didn't lead off talking about Rivian here. It's Rivian. Rivian is doing the Rivian thing.
I mean, you hit it to the T.
Oh, yeah. Here we go. Every time Rivian starts moving up, they find a way to immediately shoot themselves in the foot. This time around, they issued 75 million new shares to raise capital. In a longer-term bullish context, which is kind of how I view Rivian, I am a long-term bull, even though I will take these short-term bearish trades. I don't really know that I mind them issuing these new shares. I think in the long term, when it all shakes out, it'll probably be fine. I'd rather them have the little bit of cash on hand. But in the short term, obviously that is dilution and the market is not going to like that. We opened about 10% lower and have continued sinking lower all day, down about 15% from yesterday's close, now trading at 17.15. And yeah, I mean, it's just, here we go. Rivian, this is what happens every time we go test this 18, 19, 20 level, it just gets a affirmative rejection straight back down to the lows. I'm hoping that we'll continue down to the lows here. I know some people are in this position alongside me, but I have a 16-15 bearish call spread at 17 DTE. I put on 10 of these because they were very cheap. So actually going to go ahead and scale out of, I wasn't even thinking about the fact that I had 10. I'm going to scale out of
a great time too.
4 of these. I don't want to do exactly exactly half. I'd like to keep some on because I do think the down will keep coming. But as long as we're up, 20-30% on this position here, I'm going to go ahead and take off 4 of my 10. So leaving 6 of those to run, 17 DTE, which is July 24th, looking for a return to sub 15 for Rivian. If we get the sub 15 level anytime before then, I'm just going to go ahead and take these off because on the other end of this channel, it always bounces straight off the 13, 14, 15 level. As soon as we test those, we just go ripping right back to the highs. So I'm not gonna sit around
and break even on this one.
Yeah, no, this isn't one where like lots of the stuff I do, I'm going to try to squeeze out every last dollar of profit that I can. If I see a number below 15 next to Rivian, I'm just going to take these profits and keep it moving. And go ahead and taking off 40% of my risk there with that exit as well, and profitably so up. Something to the tone of 30% on these right now after the big down move today. So I'm content to take that. And at least leave some others to run. Leaving 6 gives me room to get out 3 and 3 if I want to continue to scale.
You feel better emotionally now that you're
Yeah, exactly. Yeah, so lock some in. I can't do all the quick math off the top of my head, but probably covered the cost of like 2 or 3 of these other 6 with that exit. So there's a little bit of house money in the equation here as well. But yeah, here we go. Rivian. It's the most classic Rivian thing ever. I say it every time Rivian goes up. I say it every time Rivian goes down. If you're not taking advantage of this channel, you're missing out. Rivian loves to run between these two numbers.
This is the epitome of what goes up must come down. What goes down must go up. That's Rivian in a nutshell.
Thank you, chat. Welcome to Wrexham is not the same as Ted Lasso. 2 different TV series. That's why I'm associating Wrexham with TV
series.
And there's Mr. Pillows. I've been thinking about your Rivian position. Good, Mr. Pillows. Yeah, happy you're in there with me. Things, going swimmingly for us right now. What's going on, Ranch? Good to see you. It's a fake team. You need to watch it, says Darren. Okay. Everybody bullish Ted Lasso in the comments. I would like to watch it. I just don't do a lot of TV in general. There's lots that I would like to watch, but I've heard it's a great show. I've only ever heard good things.
Yeah. Rivian doing Rivian things. What's funny about selling these shares on the inside? Usually when it's usually like a crappy company, selecting words carefully there. Whenever it's a very crappy company, whenever it's like under $10, whenever you hear an offering or whenever you hear the company is selling shares on the inside, that's like death to the stock. but it is interesting to see whenever you have a company that has good fundamentals and is a legitimate company. I mean, we see Rivians driving around on the streets. I mean, there's a Rivian garage, I think just a few blocks down that I ran into outside of the studio. So with it being such a legitimate company, it is funny that the perception on the company selling shares from the inside to raise capital is seen completely different from a small cap standpoint into like a Rivian standpoint. And when I'm saying small cap, I mean anything from like $1 billion and under. Like that's very small for the stock market. And it is just funny how the perspective and the emotions about hearing the company selling shares on the inside is just completely different because all hell breaks loose whenever a crappy company does it. That's very small. And oftentimes these smaller companies will like to do that because they recognize my stock I don't know when the next time my stock is going to be at this price point. So a lot of times they take advantage of that to sell some shares off onto some of their investors sometimes. It's kind of a murky waters there. But anyways, to see Rivian do that, I think that they're going to do great things with whatever extra cash that they have on.
Yeah, I agree. And like I said, I mean, in a 2-year sort of time frame, I have no doubt that Rivian will do the right things with this capital. And it's a capital intensive business to be in, trying to manufacture electric vehicles.
Make a roadster.
Rivian doesn't have a real sporty vehicle. They could break into that if they want to, especially as they try to, capture the luxury EV niche a little bit more.
Do it, right. To the point you made the other day. I mean, Tesla again is trying to shift into more of that Honda narrative, more of that Honda type play. So somebody can come swoop up the luxury EV market.
Make sports car. I'm sure they could do it. But it's an expensive game. You need battery factories. You need assembly plants to put all the things together. The batteries are usually the biggest bottleneck for these EV companies. I must admit, I'm not sure exactly what the bottleneck is for Rivian, but more batteries never hurt an EV company. Yeah. And they've upgraded their delivery estimates through the rest of the year. So production's already going well, and it's only going to get stronger. I do like it for Rivian in the long term. But yes, in the short term, obviously, empirically, this dilutes shares. So you're going to see.
From a trader standpoint, volatility is opportunity.
Yes, exactly.
What else you got on top of mind for you?
Baxter International, BAX. This is one that I've mentioned before, and I actually went out of my way to make sure I could thank the specific congressperson who gave me this trade. Shout out to House Republican Michael T. McCall.
Okay, McCall.
Who put this one on. I saw him grab $300,000 of this back in March. thought that was very strange, especially because I'd never seen his name pop up before. And whenever like these, if you keep up with the Congress trading list, you'll see the same names a lot. And a lot of them I don't even think are like being shady. They're just very active traders. Lloyd Doggett, Gilbert Ray Cisneros. There's Ro Conan or something like that is another one that I'll see all the time. There's like a regular cast of characters here. So whenever I see somebody that's not usually in that cast of characters pop up, I always give it a side eye, and particularly when they're throwing around six figures, like this House Republican David Taylor. I've never seen him before, bought some Chevron, but he bought, $5K of Chevron. I don't really care about that. That seems like a reasonable investment. So there's levels to it. But whenever I see,
get your bread up.
Yeah, whenever I see an unknown name buying a lot of something, the alarm bells start to go off. So I blindly followed in this Baxter trade. I just have one January 21st, 2028. Okay. 35 call. So gave myself plenty of time. I was like, I don't know what the thesis is. I don't know what this guy might know or not know. I'm just going to give this plenty of time. It's an S&P 500 company that's coming off its lows. It shouldn't really be a terrible buy in the first place. And there was like a month there where I was like, what are we doing, Mr. McCall?
Is that a fat finger?
We're running sideways here. Yeah. Did you fat finger this? There's two of them actually too. It was a 250 and then a 50.
Oh.
So I guess, couldn't have fat fingered it. But now I see whatever he was seeing. I still don't know what's happening to drive this company up.
Trust the process.
Yeah, but sometimes it's just that simple though. Sometimes you don't have to know what's happening. It's just shady is a little shady, and all of a sudden here we are, sitting now 30-40% higher than we were off those lows when I initially scooped this. So going very well on Baxter. What even was my spot on this? Let me see. I entered this.
I was waiting for Nancy Pelosi, but no, you caught me off guard with the other name.
I did take one of them off. I entered two of these at 155 each. I took one off at 230 on the 2nd of this month as we started this climb. So I'm just holding my one runner now, 155 average, currently trading at like 230. So we're up. Yeah, I mean,
let's go to the moon.
Yeah, about 50. Well, yeah, a little over 50% here. Almost exactly 50%. So yeah, we continue to climb. I don't know if this 35 strike call will ever be in the money, but with 2028 as my expiration cycle, I have plenty of time to let all this play out and see if we want to fill this next gap up to the 28 level. So shout out to Baxter.
100%. I mean, 35. We were trading there just end of March, beginning of April. So it feels like we're such a far from a price point standpoint. It feels like we're so far away. But honestly, from a time standpoint, you can see how much ground this thing can make up in a short amount of time. So.
Do you believe in miracles? SPX back to 75.50 by the end of the day.
Do we believe in miracles? SPX back to what was the number?
75.50.
75.50. Okay, where's that sitting right now on the chart? 75.50, 75.50. 75.50 here. Oh, back to the day high. Do we believe in miracles? How much time do we have left? Today it's 10:30, it's 10:53 Central Time, 11. We got 4 hours left in the day? Yeah, I mean, that does not seem very far-fetched either.
It could happen. In this market, it could happen. The funny part is, I don't even know if I would call it a miracle in this market environment.
Another day in the office.
I mean, it's statistically improbable, but I don't know if I would use the word miracle or tail risk. It feels like that's. I mean, what is the
bat an eye.
What's the expected move here on the 0 days?
Let's see. What do we look?
75.25.
75.25.
So 75.50 is just inside the second standard deviation. So. Not quite technically tail risk, but that is, we are moving towards the tail there. In a bell curve context, we're pricing in like, I don't know, 5 or 6% chance of getting to 75.50, but it could happen. There are worse chances. Betting on a single number on a roulette board is worse. Believe in something.
I mean, I'm curious what we were pricing in this morning, because I'm not going to lie, the market's selling off to the downside. I was a little bearish, but I did not expect us to fall that far. I guess I'm a little still bitter from covering that position right at open as we continue to sell off lower. But I'm curious what the options chain was actually saying in the morning and what the expected move was before we put in that downside move as the market opened up this morning. So anyways, with that being said, I think the volatility is there. It could do it. It could happen. Maybe Trump wants to come out.
Yeah, you're one tweet away. Yeah, you're always one tweet away.
I mean, you're literally one tweet away. I mean, especially with Trump getting involved lastly with the USA headlines and the cards. It's just so funny because from a market standpoint, we understand anything can happen. Any headline can happen. But to see that in sports was kind of just funny that legit anything can happen. Because if you think about it, if you're a sports bettor, like that probably changes. Like it's a different type of trading, I guess you could say. Like that probably changes your expectations a little bit. And it's like if I was a trader and Trump said something about the Strait of Hormuz, that's going to change my expectations a little bit there. So anyways, with that being said, expectations, 75.50. Maybe we get there. 4 hours left.
Yeah, and those two things, trading and sports betting, are very similar. No, neither party wants to hear it, but it's all. If you're doing either one right, it's all. I mean, small size, law of large numbers, 1% edges make money over time. It's the exact same principle.
And then again, we got the headlines, right? Like that.
Yeah,
I haven't sports bet myself, but I can imagine seeing certain headlines in sports would change my certain levels of confidence and conviction.
Oh yeah, and much like the market, if you are somehow on the ball enough, you can beat the market to that information before the lines move in. But it didn't pan out. But when the Balogun red card got lifted, I raced in to bet USA to advance at -110 because they still had the game at a pick. And then 20 minutes later, that moves to -140, and then it was out to -160 by the time the game was played. And obviously, it didn't pan out for me. But there is CLV, there is inherent EV there, and yes, it's very similar. If you can front run the market on the news, you can take advantage of that.
Trump should have hit me up, man, before you. Come on, Trump. Come on, man. Nah. With that being said, what else we got? Anything else kind of catching your attention today?
I suppose the only other one that I would flag, just because I haven't talked about it since I put it on, is Alit. ALIT is the ticker. They just did a reverse split. So I'm in a whole interesting situation here. You can see a nice run happening. I forget it was months ago now, 125 days ago, in fact. So not quite last year, but 4 months ago, somebody shouted out Alit to me in chat when I joked that I was looking for some pennies to throw on. I am pretty much exactly at break even on this, but I have a weird situation. So I had 50 shares. They did a 1 to 10 reverse split. So that took my shares down to 5. That's clean. But I do have a pre-split 5 call, which is actually 50 now, is the way that translates. So I have the weird NS tag. I'm sure you guys have seen if you've ever held option through a split before. So fundamentally, it doesn't really change anything, except liquidity is going to be really, really weird. I might have a hard time getting out of this. I considered not holding it through the split, but it was basically at 0 anyway, and I figured that the split would do something like this. So I decided it was worth taking a shot. I don't know. We'll see if I'm ever able to get out of that 5 call. But my now 5 shares, formerly 50 shares, are at exactly break even, down 60 cents. That's not an option, 60 cents. That's 60 cents as in I'm down 12 cents a share. Just moved into 38 cents. We're down 3 cents a share. So closing that gap there.
Teetering that line.
Hoping for some more upside. I bought this because it was a penny. It's now split, and it's not technically a penny anymore, even though nothing has fundamentally changed. It's a whole weird situation. All I know is there's a gap to fill up to 25. So let's do that.
Pretty big gap there too. And yeah, no, this has a lot of momentum off its bottom so far. I mean, 4 or 5 consecutive days to the upside. We're putting in larger ranges that we've seen over the last couple of months in here too. So maybe things are starting to expand. Maybe we can get it. We got that gap to fill to the upside. So and then again, because it's a cheaper underlying, it's not to understate the percentage moves things like this could put in. Just like with Rivian being down $1.50, it's down over 10% on the day. It's 15%. So everything's relative for sure.
Yeah. Oh, thank you, Robert in chat. SPX expected move at open was around 31.
Was it around 31? I'm actually really curious. Let's quickly see where that was at, and then we'll take a quick look at VIX before we wrap for the day. Was that 31? Is George saying?
The expected move was 31.
31, yes. 31? 31. Where was that at this morning? 74, 31?
No, 31 points.
Oh, 31 points.
Yes.
Okay. Let's see. And we opened up at, where did we open up at? SPX real quick. We opened this morning at 8:30. Okay. It's looking like we opened here, 75.16 we opened up at. So what, 30 points from there is going to be what, 45? 40, yep.
Well, no, it would be 85.
Oh,
coming
85.
Down.
Whoops.
Yeah.
5. So we've, I'm like, where is this thing at? At 85. I mean, we've almost
so
bottomed right around the
I was going to say, how about that? How about the market? The market technicals just working perfectly.
All right, the math is math.
The math works. Math checks out. Robert knows his stuff, confirmed.
As I started to look at the rest of the scale off to the right side and started to go down, I was like, oh, wow, we really bought it.
Just right there. Yeah, how about that?
Anyway. With that being said, let's quickly check out the volatility index before we wrap for the day, Gus. So far down on the day as the market is recovering here, we put in a high on VIX at around 1664. So the 1610 VIX we're sitting at right now, we're on the 1 minute chart. Let's go ahead and zoom out to the daily, at least get a better perspective there. Sitting at the lows, volatility absolutely getting crushed, but that's great for some premium positions, managing some positions on the day. taking a little bit of profit. But we are running out of time here. Anything else top of mind before we wrap for the day, Gus?
No, nothing else for me. Rivian, yeah, I stay on the train of Rivian to the Earth and then back to the moon. That's what we need right now. So hope you make some more legs down there. And Baxter International, keep doing what you're doing. I don't know what it is. I don't know what the company even does in the first place, but keep doing it. It's going well.
Absolutely. We just manage our risk. I don't know.
Yes.
With that being said, guys,
congratulations, Ranch, on the SPX 0 day. Clap it up. Claps for Ranch. Thank you. Good job, Ranch. All right. That's all I got.
Mike's back there. No, with that being said, guys, thanks for taking the time to hang out with us for the day. There we go. In the chat. Thanks for taking the time to hang out with us on the day. We'll be back managing these positions for the rest of the week. Be sure to stay tuned for more amazing content coming on next. We'll be back in a couple hours and we'll catch you guys next time.
Hello, Tasty Nation. Welcome to the show. It's Tuesday, July 7th, and the markets are flat for now. But join us on the YouTube chat. We are streaming live there. Just pop over to the Tasty Live channel. You can see that live video. Throw in your trade ideas, questions along the right-hand side chat, and we will get to them as the morning goes on. My name is Mike Butler. I'm here with Jamal Chandler. And Jamal, we've got potentially a doozy of a day because everyone that's a U.S. citizen that was rooting for the U.S. of A. in the World Cup just might be a little depressed today, a little sad. Maybe the button clicks a little bit less and we see a lower volume today. What do you think about that theory?
You know, I never felt more American than last night. And by that, I mean, amidst the loss, I meant we were so brash yesterday, bro. We just assumed we were going to win. Like, it's not even our sport. You know what I'm saying? Like,
I couldn't name more than 3 guys on the team.
Exactly.
Like,
it's not even our sport. And we're just like assume we were going to win.
Yeah.
We just assumed we were going to win. I mean, look, I usually say in these situations, there was no cheating. So it's like, shout out to Belgium. They looked, actually, the one thing I looked up during the game, I was like, how much older are they than us? Because they just looked stronger. Like, they just seemed stronger. They seemed like they were pushing our dudes around a little bit. And, well, as we do these days, I asked an AI agent, and it gave me the answer. And it said our average age was like 26.4, and their average age was like 28.5 to 29. So I think that factored in. It seemed like to me yesterday. Again, I know a little bit about soccer, but I definitely know a lot about sports and aggression. And you could just tell they were just like, they have a little older presence, and it showed yesterday. So, man, it was rough. I mean, not only that, you know, like not only to lose, but then have Christian Pulisic leave out the game the way that he did. It's tough. It's tough.
Classic.
We just
how about Seattle? I can't believe they got multiple games. I wonder what they did to get that done.
Yeah, I don't know.
But I was there when they had the first one, and it actually is a really good viewing experience because they had an entire stadium like watch party on the dock. So like this whole area where there's these steps that go up to the market and then come back down to the water. And then at the end of the dock, they had this huge projector.
Nice.
So they had thousands of people there. Then they had thousands of people. So they probably could just house a ton of people relative to other cities.
Yeah.
Because it's all just on the waterfront.
Yeah, no, I mean, that had to be beautiful viewing. Yeah, I'm not sure. I did see like a chart yesterday. Somebody posted, it must have been Twitter, and I saw something about just how well the local economies where they have these games have done. And by the way, shout out to Chicago, who we didn't have it. We talked about that yesterday, but it was Seattle is the one that benefited the most of all of them. Like just the chart that I saw and just like how it benefited them. So yeah, it looks like things went really well there. And overall, it looks like it was really done well, I would say. It's been great, but yeah, now I don't know. I guess now I'm just like outright rooting for France. I guess. I think
feels all right.
I guess, you know, like I don't know. I'm trying to think. I mean, I'm not rooting against Norway. Norway seems to have captured other people's hearts. That's kind of a dope story. Rooting for France. My mom is a huge France fan. She loves Mbappe, so I guess that's why I say France first comes to mind. But
yeah, I'm gonna let the narrative develop. But Gus will actually be in here in a little bit, and he will have an opinion.
I'm sure he will. Yeah. Speaking of
He's deep in the numbers.
deep in the numbers, that he is for sure. Yeah, we do have a bunch of stuff going on here. We got you coming up with a math check in a little while. We have Chris with a signal versus noise. I believe he's going to come and talk to us about some Dell and AMD trades that we've seen recently. Liz is going to come and talk about overnight moves. You mentioned Gus coming in first, her son. Just I'm going to keep that going. I'm not even going to. Gus is going to come in with morning movers, and then Liz will come in with overnight moves, and then we will get to the opening bell, of course. Then we have a guest, Ben Sturgill, CEO of Smart Data Trading, come by the show. We got trades with TP. We got Tim Knight with his charts. We got Julia with some research pieces. So I'm sure that's going to end up being a good one. We got Errol also stopping by from the floor and talking about trading ranges that he's seeing. And we got a great show ahead. So please check it all out.
Yeah, it's going to be glorious. It's going to be glorious. Futures markets aren't really moving too much. Everything's within 1% to the upside. Crude oil up 0.75%. Gold kind of just chopping flat. Downside moves, natty gas. NASDAQ down 1% almost, which is interesting considering the E-minis are flat. But that's what we talked about yesterday with Kevin from the NASDAQ. The NASDAQ is so concentrated that you're going to get these whoopie moves where it could be disconnected from the E-minis when you have sector bounces in different directions with the much more sector diverse S&P 500. But
to that end, I was actually thinking last night, and I know this is off script, but I was thinking last night about the chart that he put up. Remember the one he put up, VXN over VIX, and how other comparable times are like 2017. And then sure enough, yesterday feels like that. We're in a low volatility environment. We just continue to trend higher. It's either that or it's I don't think the crash is coming, but I think we're at a very low vol environment and correlation is like 4 and, VIX is 15. VVIX is 87. I just noticed that yesterday towards the end of the day. I didn't even notice that. So I think it might be time to take some short vol off a little bit.
Yeah. I mean, it's at the bottom of the barrel, VVIX specifically. But yeah, I think right now we're kind of in this lull period, but it feels like there's nothing in the general market that's really spooky to this market.
Agreed.
Assuming earnings go well in a couple of weeks here and nothing crazy happens and the Fed decision coming up goes as planned or as expected. It just feels like we're in this summer lull. But speaking of the NASDAQ, did you catch what Jim Cramer said yesterday?
Oh, he's mouthing off again? No, I did not.
Well, I got something for you. And we're going to kick it off with this math check in just a second. Okay. The NASDAQ slid hard into the close, and Jim Cramer blamed SpaceX's entry into the NASDAQ 100. If index funds had to buy SpaceX and sell existing names to rebalance, that could have created billions in mechanical flows. Could that pressure spill into today's open? Possibly, but it probably wasn't the only driver. Profit-taking, options positioning, and weaker risk sentiment likely added to the move. If the NASDAQ rebounds quickly at the open, that would point to a flow-driven sell-off, not a fundamental one. So I asked you this question. Do you think that the late sell-off in the NASDAQ could have been a result of SpaceX?
Yesterday? I mean, I didn't realize we sold off. It's like a whole 100 points in the NASDAQ. I don't know, man. I think it's a stretch. I didn't see that kind of movement. Yeah, I would say. It's not to say that it didn't happen underneath the surface, but I didn't notice that kind of movement. I do think it's at some point in time, I do think just from the sheer size of SpaceX, maybe it will have an effect on the indice at some point, but I didn't notice that yesterday.
No. Yeah, I think it was really just reaching at straws. Like, to your point, it could have been the flows could have happened in a way that created that micro sell-off here, but still, it was not big enough to really get the attention of everyone that's paying attention to the markets. And when you look at the difference between SpaceX and the NASDAQ, SpaceX right now is totally flat. NASDAQ is down a little bit, but I think when it comes to these things, the market does a pretty good job of smoothing it out so that there is no arbitrage opportunity in situations like that. So
I don't know. Let's look at a 1 minute chart. I mean, now I want to see this. So this is the 1 minute chart of SpaceX or that, either one, NASDAQ. I don't know.
Yeah. I mean, it was right at the end of the day yesterday. If we look at 6th and we zoom and we zoom.
Yeah, right there's a close. The big red bar there.
Yeah.
That's a close.
There you go. So yeah, I think it's just a matter of general movement.
Oh, wait, after the close all the way overnight? I don't know about that. I mean, you're talking about from literally the close right there?
Yeah.
That move?
Yeah.
I still don't think so. I'm going to say no.
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 I don't think the move was big enough. And it's not, the continuation
What does
is not.
SpaceX do across that same time period? Well, there was a little buying into the end of the day.
A little buy into the day.
There's a little buy in the end of the day. I can't deny that.
Little dippy doing a little rally. But yeah, I think the volatility. So I think the point is the volatility was expected. The SpaceX volatility, like even this rally, like sure, this happened, technically speaking, but this is a 5-point rally. We're looking at a 10-point, 11-point range for the rest of the week. We're looking at 17 points for the end of next week. So this is expected movement, like day to day, 2 to 3 points, 3 to 4 points, 5 points in SpaceX. Like that's expected based on the current implied volatility. So again, I think sometimes you have these headlines, and yeah, maybe there's a little bit of weight to it, but I don't think it's anything that is groundbreaking in terms of market manipulation, arbitrage opportunities, those types of things, because the market really does do a good job of smoothing out. Like when was the last time you saw a dividend removed from a stock price?
No,
it's like it's almost impossible to see. But
right.
It does happen.
It does. It has to be a really huge one for it to be noticeable.
Yeah,
right.
And there has to be no market movement to offset that. That's really the thing. Is like, yes, this thing could. If there was a flat market and nobody else was doing anything, you probably would have seen something with SpaceX and NASDAQ. But because the markets are constantly moving, it kind of clouds these sort of events.
Yeah,
like this kind of event, and I think a dividend is a really good argument in the same light, where if there's a 50-cent dividend, $1 dividend, the dividend gets removed from the stock price, but the stock price is still chopping, so you just don't see it.
Well, to your point, it's known that it's coming. And again, I mean, the whole world knew that SpaceX was going into this thing yesterday. And yeah, I mean, you do see the buy program in SpaceX, but I don't see the corresponding move in the NASDAQ. And again, we're talking, this was the end of the day. So again, what we saw was from 2:40 p.m. Central Time to 3, there was a buy program in SpaceX. I didn't see a corresponding sizable move in the NASDAQ. But again, everybody knew that this was coming. There wasn't any arbitrage opportunity. I mean, basically, if you bought SpaceX at 155 and change yesterday, then you just wrote it. You were lucky to, and everybody was in there trying to buy it. This is just classic buy and buy and sell movement that you see. I mean, it's classic market related stuff. It's nothing out of the ordinary, I would say.
Yeah, and the arbitrage opportunities are really few and far between. You have to basically time it perfectly. Like that's the thing. If you bought SpaceX thinking it was going to rally because of the inclusion, but you bought it at 162, you actually are down
right
from yesterday's high. So,
which I'm sure a lot of
one of yesterday's highs. So, yeah, I think it's tough. It's tough to pin it all on that, but definitely interesting to see the movement that we're seeing today. But still, we're chopping around. Anything within 1% is basically expected. So, nothing too crazy in terms of movement that's pushing and pulling this thing.
I think this chart shows exactly that. This chart shows like everybody was thinking, oh, they're going to buy SpaceX at the end of the day. And the sellers came and boom, smashed them.
Yeah.
They smashed them all the way down to 155. And then all of a sudden they were like, okay, well, they're going to buy at some point. Are they going to buy? That's all that lull is. Are they going to buy it? Are they going to buy it? Oh, they're buying it. They're buying it. They're buying it. And then you see that.
Yeah. But we'll see what happens to the rest of the market here. Still got about 45 minutes. And before the equity markets open, and the NASDAQ is down a little bit more than the E-minis right now, 0.8 percentage points here, down 230 points. Bitcoin and everything else kind of flat, chopping around. We don't have too much in terms of earnings left.
No, we don't. No, this is really truly that lull period, like you mentioned. We're right before earnings. We got a little under 10 days here. And so I don't know about you, but yesterday I decided to go out and buy a couple of consumer staple things, get some diagonals. and a couple of names. Just looking at yesterday was interesting, seeing how tech was moving, chips were moving. A lot of those names were down. I know that's names that we've dove in before, Walmart's, Costco, but yesterday I decided to add to that some diagonals in Colgate Palmolive, Procter & Gamble, and McDonald's.
Yeah.
And Target. It's another one. Yeah. So
I like it.
Buying September, sell August. See how it works out. I truly believe that when we do sell off in semis, they're going to rotate back into those type of names.
I mean, we've seen it before. We'll see it again. The rotation is real. It's just a matter of time. It's hard to time them, but when you see the writing on the wall, maybe you start to take a shot here. So all these products are down. Costco's down.
And all these trades were under $1,000. I mean, like the Colgate was $300, Procter & Gamble $700, McDonald's $800. So Target $700. So they're all kind of like in that price point.
Yeah. We do have a guest on the line. The first guest of the day, always our favorite guest today, Mr. Chris Vecchio. How you doing? You're muted.
I mean, it'd be fun to stare at you.
It might be us. It might not be you.
It's not me.
See, that's what he said all the time.
Yeah.
I bet he said that all the time when he was dating. Look, it's not me.
Yeah. It's not me.
We hear you now, though.
Most
We
certainly
hear you now.
Oh, well, that's good. Well, yeah, I said you guys survived that storm last night.
Yeah.
Correct?
Yeah, we did. Yeah, it's coming with Wednesday, from what I saw. Wednesday.
Yes.
Right? Yes.
The Austin Powers formation making its way through the Midwest.
Yes.
The Austin Powers formation.
It is actually one of the big things I think in my For You tab that keeps showing up.
Good.
I don't know if
Good for you.
I don't know if it's as a result of you letting us know, but it's definitely all in my For You now.
No one has any idea what we're discussing, and we're going to leave no more information out there for the audience.
I think they can read between the lines. There's someone watching or listening.
There's storms coming on Wednesday. What? I mean, everybody's just seen probably. Look at the weather. Take a look.
Just check out your weather maps, folks.
Yep. Chris, what are you doing
How are you
today?
guys?
Doing great.
I'm
we're reeling
dealing with my own downpour.
How are you
honestly.
doing from yesterday as a result of yesterday's situation?
Reconsidering my personality if my coworkers think I'm doing like a gopher thing in Bill Murray Caddyshack. But outside of that, what else is there to be concerned about?
Well, I mean, see, you're still so basking in the Knicks win that you probably forgot that the U.S. lost yesterday. You're not even thinking
I don't
about
care
that.
at all. I don't care at all.
You're like, I got
who's
my
the goalie?
100-year storm. I'm good.
Yeah, who's the goalie? Tim Rame, 38 years old. I mean, look, the reality of soccer in America is our best athletes go to basketball, football, baseball, hockey, and then maybe soccer. So, this is where we are.
You know what was funny last night is we were watching Little TV afterwards, and I swear I saw like a couple of different U.S. commercials that I didn't even know existed. It's like they got to get them all out the system now because the dudes aren't playing no more. Kind of funny.
Well, there's always next time.
That's correct.
It's like when you're watching NCAA and they're showing commercials, the NIL commercials of like dudes that aren't playing anymore. It's kind of awkward,
They did that in the Knicks Hawks series because you have like Jose Alvarado and Jalen Brunson and Cat in I think a T-Mobile commercial. And so when the Knicks went down 2-1, they're like, oh geez, better get these all out there right now before the Knicks get eliminated.
It happens.
Little did they know.
It's a thing.
Anyway, you guys were just talking about semiconductors here on the dip. Most of these names, STX, Micron, Western Digital, they're all down around 20-25% from their highs. So there has been a meaningful correction in this space so far. But one of the reasons why we're talking about that this morning is because we had Samsung earnings last night, and they were very good. But as we know, the stock is down 10%. They were higher in guidance. They were higher on revenue margins. I mean, just pick something out of the hat. The metrics are going up. But they're also saying they're going to have to spend a lot more money moving forward to meet the demand, that's the cure for high prices. High prices invite higher prices, which invite more capital, which invite more supply, which ultimately bring about those lower prices. So let's just talk about what's happening here in the broader market right now, though. Options traders are now the most bullish in the market that they've been in 5.5 years. The total put call ratio just collapsed to 0.64, which is basically saying that no one's paying for downside protection and everyone is bullish right now. So there's euphoria, dip buying, melt-up behavior. Every single pullback we've seen has basically been treated like a gift at this point. So we've been talking about perhaps the Trump trade for a few weeks here. And why am I bringing this up right now? Trump mentioned Dell again yesterday. Did you guys see the press conference where he shouted out everyone should buy a Dell? Dell shares were up 6.5%, $15 billion in market value. Interesting. But, a few days before we get our Trump pump here, people are in Dell trying to call the top, which is, I know, the whole point of this options activity, signal versus noise segment here. August 21st, 420 puts, the premium 2.72 million spent with an IV of 77%, which when bought at the ask, 94% of the flow was hitting the ask side. So this was not, just a simple bearish bet here. I think this is someone who's looking to pay up for downside on a stock that has obviously a lot of the zeitgeist wrapped around it right now, thanks to the president's attention. We have another AMD trade here. June 30th tape showing 3.77 million in AMD July 2nd, 557.5 puts with IV at 86% and 75% of the trade hitting the tape. So while AMD had ripped back to all-time highs yesterday, we know that it's been sagging back with the rest of the space here today. We know that the company joined the Trump accounts, matching the $1,000 contribution for employees' kids. And which, by the way, can I take an aside here? If you have a young child who's eligible for the Trump accounts, you're out of your mind if you're not doing it, given how much money you can contribute and how it gets converted into IRA, Roth IRA conversion applicable at 18. If you track the index for the next 60 years, your kids are basically going to have their retirement taken care of. So as an aside, definitely save and invest. I take a step back here, though. We're starting to see this unusual options activity right now in the tape, Jamal. Whether or not it's tied to any of the earnings, whether or not it's tied to any of what Trump is saying is another story here. I'm going to take a step back and say these are small potatoes. These aren't the kind of numbers that we've seen in major trades in the past when Intel had that $240 million call buy a few weeks back. And those calls are actually doing fairly well right now. Mm-hmm. These are people who are basically placing a short-term directional bet, looking for a very specific outcome after we've seen this correction in some of the chip stocks. So yeah, it doesn't feel like that the chip stocks are down big because of the run that they've been on over the course of this year. But in technicians' terms, they are in bear markets right now, having collapsed more than 20% from their highs.
I mean, again, these are mostly at closer to the ask, which tells you that the aggressive trader is the one who's buying. Obviously, there's a buyer and a seller, but the aggressive trader is closer to the ask. Therefore, you can tell that that sentiment is wanting to buy those puts. And look, we've had some big runs. People are going to take stabs at these, whether it's August, whether it's out to September or October, and some of these trades that we've been talking now. And again, like you said, these are pretty small, but it just gives an idea of sentiment. There are people out there who are looking for the moment when we start to fade in these names. I mean, heck, I'm thinking about it. I was just talking with Mike. This is an overall market thing, but correlation is very, very low right now, and VIX is low, and VVIX is low, and just those things alone doesn't necessarily mean that there's going to be a market blowout. But I mean, the lower we get, the more explosive the move higher comes for those things, and the more explosive the move to the downside comes. So I can see why people are starting to look at these. I still say these are very expensive options to be buying, though, like buying Dell, buying AMD. I mean, buying put options in there are very expensive. There's better ways to do this, I think. But if you got deep pockets, who cares?
Could I?
That's fair.
You mentioned correlations in the market falling. Can I bring you back to the last time that the Core 1 M index was sitting at 4%? It's actually 3.99% right now.
Was it June?
You have to go back to July 24.
Okay.
Right before the market had a significant pullback. I'm not saying it's going to happen again here, but July 24 rolls around. From that mid-July high to the August 5th trough when we had the yen carry trade blow up.
Oh, last year?
2 years ago, two summers ago. NASDAQ goes 15% down from its high in the span of like 2.5 weeks. So I'm not saying that's going to happen again, but if you start to see a little bearish price action gain traction here, I'm bleeding bullish, to be clear.
No doubt, but that's why you buy those puts.
This is one of those environments where if something bad happens, it could cascade very quickly.
Yes, for sure. Because we always talk about how crowded this trade is. That's always the concern. I'm bullish too. Hell, if we had that move today, that's going to be ugly for my book. I can tell you right now. But that's why we think about how crowded this trade is, because if we do have those days, it could be ugly. But I also hope, and I've seen so far a lot of times when we have the pullback in the chips, it's flowed into consumer staples. So hopefully that's the way it plays out.
Yeah, I think the rotation.
Selling chips to buy chips.
Ooh, I like that.
There you go.
Yeah, I think the rotation is certainly alive and well. And then to your point, Chris, volatility futures are still in a pretty steep contango here. So I like to look at that and just let that be my guiding light. So I'm on board with you buying the dip here. But if you're looking for downside hedges, they are relatively cheap, especially in like NDX or SPX if you make them a little more narrow. But yeah, Chris, appreciate your time. I'm happy that you are unaffected by the football loss, but yeah, we've got plenty more content coming your way on the Tasty Live channel. So join us on the YouTube channel. Let us know what you're thinking in the YouTube chats. Chris, we'll see you a little bit later, and we're going to take a quick 90-second break. You're watching Tasty Live.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Putting on strategies, that's easy. Taking off strategies, that's also pretty easy. What do you do with everything in between? Well, in our Options Crash Course Strategy series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
What's up, everyone? Welcome back to the show. My name is Mike, and the markets are down a little bit here. E-minis down 11, NASDAQ down 310. We've got some early movers to the downside, specifically those semis. SMH down quite a bit from yesterday's high. And I'm sure we've got plenty of trade ideas in the YouTube chat and elsewhere for some of these products that are taking a beating here in the early morning session. But I also have Gus in the room here for some morning movers. Gus, how you doing?
Good, always good. Yeah, we got all kinds of movers going on this morning. We got things in Asia that are moving us. We got things domestically that are moving us. It's an exciting day. Kicking things off, I think, with Samsung, which we were just discussing off air. U.S. memory stocks are set to open lower after Samsung is moving down, closed 7% lower at the end of the day yesterday. Obviously, that's Korean markets, not aligned with American markets. They posted an 1,800% jump in profit, but extremely high capex, which has scared investors a little bit. All these memory stocks, I've been saying for months now, it's really hard for these companies to do anything at earnings that's really going to propel them that much higher. It feels like when you do all of this running up, when you're talking about being up 20, 40x year over year right now, what can you really do in earnings that would blow people away so much that you can take a further gap up? Samsung answering that question for us again today. An 1,800% jump in profit is not enough to continue to prop their shares up after this incredible run that they've been on. How mad you got to be if you're a Samsung executive right now? You say we're up, we've increased our profits 18-fold year over year, and the market says, yeah, but you're spending too much money. Let's calm down. So interesting spot for Samsung, and that is going to have a tangible impact on U.S. memory stocks. All these memory stocks kind of move as a unit. I often talk about how frustrating it must be to be an executive at Micron, and you got to worry about everything that's going on at your company, and then you also got to worry about what SanDisk is doing, because if SanDisk does bad, your stock's going to come tumbling down as well. And Samsung, SK Hynix also can play into that equation from across the pond.
That is a good point. I mean, when you talk about how these companies are very similar, if one catches a cold, if one sneezes, the other catches a cold, and so like there is that. There's always that you have to pay attention. But yeah, 1,800%, jump in what revenue?
In profit. In profit.
God, how is it not just completely going to the moon today? Just talking to Mike about how I saw their employees are, I think on average, are getting like $400K in bonuses. So it's been a good year.
I would imagine. I mean, yeah, I've joked about that a lot too. Like you're just a random, say SanDisk employee, and you've just been chipping along, making SD cards this whole time, and everything's good. And you got your little stock purchase program, and got a few hundred shares, and then suddenly the shares go from $40 to $2,000 in what feels like overnight, and you got this giant portfolio you're sitting on. So yeah, good time to be an employee in one of those companies for sure.
Absolutely. And yeah, a lot of these companies are down pretty bad this morning. AMD down 20 points, Micron down 50 points, Dell down 11, SanDisk down 100 points. So we're seeing a pretty broad sell-off here. SMH down 20 points also, which is a pretty big move, all things considered, when you look at the implied move for the rest of the week here.
Yeah, I wanted the Dell shorts yesterday, and I'm kicking myself for not taking them. They moved up because Trump said it's a great time to buy a Dell, and I am the number one proponent of listening to that man when he tells you it's time to buy a stock. He gives you the playbook, but in this particular circumstance, he said that while standing in the room right next to the Dell CEO who just gave $6 billion to the Trump accounts. So I don't know that he necessarily had inside info. Seems like he was just throwing his buddy a lob.
That is funny.
The press, man. He's a trip.
Beyond the move in Samsung, Rivian is taking a tumble this morning. I talked about Rivian on air with Chris and Liz last Thursday because they were moving up. Today I'm going to talk about them because they're moving down. They did beat revenue expectations at earnings. Expectations were 1.45. They came in at 1.56, so slight beat there. However, they are going to sell 75 million new shares, which I don't know if you're counting, but that is not an insignificant number of new shares entering the market. And obviously, the public seeing that as dilution risk, Rivian shares tumbling. I do see Rivian bulls on Twitter saying that this is a very bullish thing for Rivian to do, and that you shouldn't fear the dilution. But obviously, objectively, this does dilute the value of each share, and we're seeing them open about 10% lower headed into today. I hope nobody who followed me into the Rivian shorts on last Friday has panic sold their position, because we are looking good right now.
I mean, this happens. This happens in names like this that are kind of struggling, and then they have a big move, and then boom, like secondary comes. Like offering. It's like happens so more often than not.
Yeah, and Rivian especially. I could go on and on, but we've been in this channel from like 13, 14 up to like 19, 20 for 18 months now. Rivian, it's incredible. Every single time it tests these highs, it just comes flying right back down. So I put the shorts on here. After that last run up, I put shorts on that worked out as well. If Rivian touches 18 until proven otherwise, this is a brain dead short for me. I just immediately put it on.
Yeah, these are the charts you love to see, especially for two-sided action, bulls, bears, neutral traders. You all have an opportunity to make some money in this kind of chart.
From the looks of that, just let me know the next time it gets to 14. And jump in and buy.
Yes, exactly. You can do it. You can absolutely do it the other way as well. Yeah, it's just decisive bounces, fast moves. It's great. Outside of in stories that aren't immediately going to move the market, but are interesting here, Google has thrown $468 million at a European nuclear fusion startup called Proxima. They are looking to get their hand into the nuclear game. Proxima says that they will have a nuclear fusion reactor running by, any guesses?
The end of summer.
When it'll be running by?
Yeah.
I don't know, 5 years.
Yeah. Okay. Pretty good. I heard a correct guess in my ear as well. Early 2030s is what they're saying here, leaving themselves lots of room. So we're talking 4 to 8 years. Early 2030s. Does that mean 2037? We'll see what happens. But yes, Google is confident enough to throw $500 million at them, which I suppose for an AI company in 2026 is pennies.
Yeah, right.
Sure, you can have $500 million. I'm telling you guys, we should start a company. We could. Yeah. You just need to say the right things in one boardroom. But yeah, they are doing Stellarator fusion technology, which is above my pay grade to explain. I don't know. I asked ChatGPT to explain Stellarator fusion technology to you.
The $500 million phrase right there.
Yeah, exactly. Exactly. That's the phrases that we need to get these investments. We also have Alibaba banning Anthropic. They are concerned that Anthropic has, quote, backdoor intelligence risks, end quote. So we've seen lots of U.S. companies ban DeepSeek and the Chinese AIs, saying that they have backdoor security risks and are going to let out internal information. And now Alibaba is going to move their chess piece and say, no, your stuff has backdoor risks. So the intelligence war between the United States and China just continues to wage on here. I don't know that this necessarily is a giant hit to Anthropic's bottom line. Obviously, Alibaba is a large company, but seems like a drop in the bucket of their millions and millions of users at this point.
Right. We see this all the time, man. And you know what? I mean, they're absolutely right. I mean, there's no doubt that there's any backdoor intelligence. There's for sure backdoor intelligence in that. And you can understand why they wouldn't do it. That said, Alibaba being on these lows, we were asked about that the other day. I just staying away from the Chinese names. Not really. I don't care. Even though this chart looks like the lows of what we saw with Rivian, it's probably something decent to get long, but I'm not doing it.
Yeah, I agree. Like you said, it's an attractive chart, but you got to show me something. I don't disagree with the reasons that we've been sliding either. Are we really going to put in 2-3 year lows? I don't know. I don't know that there's too much downside left in it, but I have no conviction about Alibaba or really any of the Chinese names whatsoever right now.
Yeah. I feel like Baba is just one of those products where it should have 100% IV at all times. Like there's so much political risk with these products that the 50% IV is just too low. Like there's not enough premium here to sell if you're doing undefined risk trades or even defined risk trades. And if it's working for you and you're doing it, that's great. But like if I'm going to get involved in a product where I know there's political tension, there's political risk, I want to see 80, 90, 100% IV at all times.
Oh, yeah.
Because we have so many other products that offer that don't have the same political risk.
Yes, and Alibaba is chief among them when you talk about political risk. If something happens in China, Alibaba is the name that people go to, even when these ETFs exist and things. It's like Alibaba is China in a stock market context. This is what people turn to. It's the vehicle for that country. With so much overhead political risk, it's hard to get involved.
Yeah.
Do you have another?
I was going to I'll rattle off.
Yeah, because I don't want to mess it up.
Yeah, I'll rattle off 5 here real quick, just because Jim Cramer has given out 5 stocks that he says you need to buy during this market rotation. So just to put all of these on everybody's radar, whether you interpret that as bullish or bearish is up to you. But the 5 are Johnson & Johnson, PepsiCo, Starbucks, Constellation Brands,
I actually don't disagree with
Oh,
damn! I was ready to lay into it. I actually do not disagree with him, and the reason he is saying it is because of the rotation that we've seen happen at times. He's actually right on that. I will give him that.
Jim Cramer, Jamal Chandler, these JC initials. They're aligning against us.
No, but he's saying that because if you look at yesterday and you see the heat map of yesterday, chips were up and those names were down. You see it. I mean, Target, TJX, Johnson & Johnson, Starbucks, like those names are down yesterday. And we've seen the other days with the chips. We'll see what happens today, and I won't be shocked. It's exactly what's going to happen today. Just looking right now, if this day continues the way it is, with SPOOS is down, NASDAQ is down, what's up? Russell 2000 is up, Dow is up. So you can bet your bottom dollar that some of those names that were mentioned are going to be positive today.
Yeah, almost all of these that I'm pulling up are positive pre-market, at least a little bit. So, yeah, craziness.
But see, that's the thing, guys. We're telling you the exact same thing some dude up in the CNBC forever is telling you. We know what we're talking about. That's all.
Have you seen the inverse Kramer fund?
Yeah, right.
They shut it down.
Yeah.
It doesn't exist anymore.
No, I think the sector rotation is a sharp play for sure, especially if the semis continue to show weakness like we're seeing now. And we're seeing the precursor here with the Dow and the Russell up at least half of what the NASDAQ is selling off right now. So I like it. Well, Gus, appreciate you as always. And keep bringing the heat, bring those tickers, those flaming tickers that we can take a look at. But yeah, I think the products we looked at today, there's always going to be opportunities, and Rivian, an interesting short. And I hope that works out for you and fattens the pocket. But yeah, we've got E-minis down 11, NASDAQ down 300, and we're going to see what the rest of the market brings us. We're going to take a quick 90-second break. You're watching Tasty Live.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Show. My name is Mike. I'm here with Jamal. Join us on the YouTube channel, if you will. We've got Tasty Live streaming live. You can throw in your trade ideas, questions. Along the right-hand side chat, E-minis down 12, NASDAQ down 300. Liz is on the line. And Liz, I have to confess, I'm done with zero-day iron condors. I am only doing Super Bowls from here on out. They hit so quickly. And the iron condors I've been struggling with these big market moves to the upside. So I think
I gotta tell you, I'm like I said, I'm merging everything together. And good morning, by the way. But I'm merging everything together. But I think I'm learning from everyone that I'm on the show with during the month of July, in honor of Mike and Chris Vecchio. I'm doing Super Bowls. The second we get out of July, I'm going back to iron condors.
Makes sense. I like it.
Yeah,
I like it.
Yeah.
Yeah.
I'm learning from everyone that I see except for Jamal. Shame on you. I can't believe you're on Kramer.
Well, Jamal's fully aligned with Jim Kramer today. So
that is pretty funny. Jamal, Jim Kramer, shocking.
I mean, I don't know why we're the only ones to see it. I mean, this is the kind of market where if you just pull up the heat map every day, you can see the reds and the greens and they just shift around. I mean, that's what's been happening, right? And everything works until it doesn't. There's going to be a day when it's all red. Doesn't matter what you're long.
Yeah.
But right now, there's been the rotation. I actually love that there's a rotation. It's a much more fun market to trade.
Well, and that's why nothing's really falling, because as one rises, another one falls, and so on and so forth. So you are seeing that rotation. So I am saying shame on you, kind of kidding, but I heard you buy Johnson & Johnson and Pepsi this morning, so I was like,
I bought yesterday. I bought diagonals in McDonald's and Procter and Gamble and Colgate Palmolive. Isn't that what it is? CL? Yeah, Colgate Palmolive.
Yeah, it's Colgate Palmolive. That's correct.
And then Target. Those are the ones that I did. And I had a T-Mobile short put. I actually rolled that to August. It was July, but I decided to roll it to August. Why not? So again, all of those trades are essentially the things that have gotten sold off when the semis have been up, and you've seen some rotation back into them the other way when the semis are down. We'll see if that holds today, but just wanted to get some exposure in some of those names.
No, I mean, I understand the rotation. Can I jump back into SPX? Oh, good. You're on SPX, Mike. So kind of springboarding off of that, like I said, I'm learning. I'm old. I'm learning new tricks. I'm a fan of how you set up your Super Bowl. I'm a fan of Chris Vecchio's seasonality. But you know what? You want me to add like another layer onto what I'm doing for the SPX Super Bowls?
Sure. Bring it.
So I've been taking, like I said, keep in mind, I'm in charge of managing my son's account while he's in Norway right now. So he's going to be very happy with me when he comes home, because I've been looking at the SIBOs most active on the SPX, and I am structuring the Super Bowl around where the most active calls are, which is kind of a self-fulfilling prophecy. Like yesterday, there was 120,000 at one level. And so I put the strike one above it. And this was later in the day, but right now I kind of look at what's happening. The 7550 is where the most calls are going right now.
Makes sense.
So if you structure your Super Bowl wrapped around 7550, making that either your long or your short strike, it's kind of nice. You're getting it from all sides. Good setup, seasonality's there, and there's lots of players in the game.
Love it.
Yeah.
Yeah,
Great.
makes a lot of sense. And I think for these, I'm either selling a 5-point wide spread to buy a 10-point wide, or I'm selling a 10-point wide to buy a 10-point wide. Just depends on the setup. But this one, I'm working for 25 cents for 5-point wide put spread to buy a further out of the money 10-point wide call spread. But again, if we get a 20-point reversal in the E-minis, it'll appreciate enough to where you can get hit with a $200 win or something like that.
So these have been, Mike, the one you put on yesterday and the ones you've been putting on, and I'm not saying leave them. I'm not advocating that by any stretch. I like that you're taking the profits in here, but all of them would have been full profit.
Oh, yeah. They've all just moved directly in the money. It's been crazy.
Yeah. Yeah. Well, because Christmas in July doesn't end until the 9th.
That's true. That's true. But yeah, I think
these are 2 days left of it.
These are really good revelations in terms of getting the speed that you're looking for in SPX with a really small risk tolerance for the 0 days. So when you pair these short puts with call debit spreads, like literally you just need a 10-point move, and we see that all the time. 10-point moves in both directions, and you get the speed that you're looking for without having to wait to the end of the day. That's one of the sometimes frustrating things with the iron condors that I've been running into is you get the 20-point move, and now you're dealing with a marked loss until the end of the day, or if there's a sell-off. So
Yeah.
Right. So I was going back and forth with Julia yesterday, and I hope I'm not letting any cats out of the bag because, well, I mean, we do call her the black cat. But so we were going back and forth on teams. So the 0 day DTE SPX kind of was our forte because we got all that research from Jacob back in the day. And she was asking if there was any credence, because people have been asking this in the chat, in closing whatever you do at noon. And we were going back and forth on this. And Jacob did do a study a long time ago about saying when you're selling premium. So it's not this. This is a different version of the trade. You're selling, but you're also buying. So it's a little bit different. It's defined risk. But there was a study that he placed a while ago saying that if you are just selling premium one side, meaning like just the put spread or just the call spread, if you don't get the move you're looking for, close it at noon. And that was kind of interesting because you're holding it. You're either holding, if it goes down, Mike, when you're looking at this, if it goes down, you're just holding it. You're on the wing in the prayer program, hoping it's going to pop back up. But so it's much less of a loss. Even if this is in between your spread, your put spread at noon, it's going to be what, $100 loser, if that.
Yeah.
So there was some credence in that. Close it at noon. If it's one-sided, if you're bullish, or if you're bearish, if you've got the one side on.
I think a study like that just kind of lends to less of a trend and more of risk management, consistent risk management. You know what I mean?
Yeah.
Like, I think that's kind of what that lends to. I mean, it's just like, I think, just kind of consistently saying, okay, I put on for this reason. It didn't happen. Close at this time. Close at this time. And then I'm sure there's going to be outliers where sometimes you close at the time and it's actually really winning or really losing really bad. But either way, I think it just smooths out if you continue to do the same thing,
For sure. But it's interesting because if you could trade mechanically, which I can't, right? So I'm too emotional. I've been doing this my entire life. I have opinions, strong opinions, right?
Wait, what? I thought you were pretty mechanical. What are you talking about?
No. But watching my kids do this, because they don't know what they're doing, they're crazy mechanical. So if I say you put this here, you put that there, you put a GTC in, walk away, don't look at it again until noon. Because they don't know what it is. They don't have the feelings that I have.
That's fair.
You know what I mean? So there'll be days when I'm like, okay, I can't put this on right now because we're spoos around 50. Why in God's name would I put this on? And I'm looking at their accounts and they've got it in.
This explains so much now when you're like, what do you want to take out of it? That's what you're telling yourself. That's what you're thinking. You're like, what do I want to take out of it? You can't put on like a trade and just like kind of sit and watch it and see like where it's going to like maybe kind of like those call calendars that I was doing, right? Not calendars, but those butterflies that I was doing, like one in SanDisk. Like you're like putting it on and you're like, I'm thinking I'm going to get XYZ out. You're not going to sit and watch it every so often.
When I put on the trades like you're doing, like those, like what Mike's got on or your butterflies, you guys kill me because I'm going for all or nothing. Like Mike with his $100, I was like, what are you doing? You need 500 here.
Yeah, it is a dangerous game to play, these Super Bowls. Yeah. But no, I do like the closing at noon, especially if you've got your credit spread in the money, because the extrinsic value remaining in the 0 day from at noon helps you realize much less of a loss than if it was at 2 o'clock. And we've shown one of the most interesting research pieces for the near term 0 day stuff that I've taken away is that if you have existing positions on between the 2 and 3 p.m. final hour of the day, you take on a ton of risk. Like a lot of your win rate and a lot of your losses come in that period of time, which makes sense because we see tons of flow in the morning, tons of flow in the afternoon, and you can see the whippiness between 2 and 3 o'clock, especially for iron condors at the market. If the 2:30 buy button is enabled, which we've seen many, many times, where the market just rips up 20 points at 2:30 p.m. exactly, that's not going to be good for your iron condors. So. I like these Super Bowls a lot. Just route them for a credit. That's the biggest key, I think. And
well, I know we've talked about these a lot, but I see somebody in the chat asking again, what is a Super Bowl? So why don't you go ahead and fully explain it?
Yeah. So Super Bowl is just the concept of selling something if you're bullish, selling something like a put or a put spread, taking that credit, giving all of it up and buying, or I should say most of it up and buying a call spread with the premium you're collecting. So this put spread, if I just replicate the same strikes that I'm working, giving me $1.50 credit. So now I can go buy a call debit spread for less than $1.50. I still have a net credit here, and I have the ability to enter this trade for a credit. And if the market rallies, exit this trade for a credit, because my short put that has a lot of value now, if the market rips up 20 points, will have a lot less value. But my call spread that has less value now will increase in value. So you're selling something to buy something else, and they both move synergistically from a directional standpoint. So that's all the Super Bowl is. I do this in SPX. I have one in SpaceX. I have a short put at 125 that I sold for $3,075, and then I bought a 300 strike call in January for $300 less. So this is another one, Super Bowl setup, short put to buy a call, but I collected $350, so I have no risk in the middle. And if we get that explosion to the upside in SpaceX, this trade is going to be a massive winner. But I still, again, have no risk in the middle. So it's not something I'm worried about. Same thing with SPX. 5-point wide in terms of risk, but a 10-point wide long call spread. This is the one that Liz is saying, just got to let it go in the money and take all that money. But I'm probably going to
Mike, listen. Let me talk you into it, Mike. So let me talk you into it right now. Number one, you're positioned perfectly with your setup above where that 7555 is the number one. Number two, you've got a good profit potential here. Number three, it is only July 7th and Christmas pop. As Chris Kringle, Chris has told me, Chris Vecchio, are through July 9th. Today's the day we let it go, Mike.
Today is the day, huh?
Well, I'll tell you this. If the NASDAQ reverses, if we go from down 1% to flat, I will leave it on because I think that would be a precursor to a continuation to the upside in both the E-minis and NASDAQ. But if we see the NASDAQ chop around here and maybe we see the E-minis flipping and flopping, I might put in a profit target for $200. But either way, I do agree with you. The nice thing about collecting a credit is that you don't have that neutral fear of like, if this doesn't move, I'm going to lose this money, which is the case for other debit trades where you need the directional move. In this case, I technically don't need the directional move. I just need the market to not be down 30 points or 40 points, and the spread will still expire out of the money, and I'll be able to keep this credit. So that's another kind of hidden importance of routing this thing for a 20 cent or 25 cent credit, or even a 10 cent credit, 15 cent credit. It's just that you have no neutral risk. If all of these options expire out of the money, you keep that small premium and you're good. It's a different feeling than if I were putting this on for a $200 debit, where I know that as long as the market chops, I'm going to lose $200 today. That's not the case if you route it for credit.
That's true. It is a good setup, and it's a good product to trade. I kind of like what you're doing, opening it pre-market, right?
Yeah. Yeah, because you get that potential for a chop. Like we saw that yesterday. We saw an open like that, and we were up 10 points, and that spread was up like $150 right on the open, like minutes after I placed it. So it could work in the opposite way, but to your point earlier, we have so much time in the 0 day that even if the market sells off 20, 30 points, you're not going to see max loss because there's so much extrinsic value in these options. It's going to prevent you from realizing max loss. Just like a call debit spread, if you get the move in the money, but you still have a lot of time left, you're not going to realize max loss or max profit because all the extrinsic value prevents you from seeing that. So, yeah.
I do want to state for the record, though, people can flip the cards over. I'm not saying sell this. I'm saying if you wanted to, you can buy a put spread and finance it with a call spread. If somebody had the desire to be bearish or a quick pop down in the market, which happens too in SPX. That's just it. It's like you do get the pops down as well. That's what's great about this game. You can flip the cards over, and if it's set up like this, everybody can make money.
Yeah.
Yeah. And in that case, I think you consider like similar to what you talked about, like try to find areas that maybe have high strikes or just areas that are really I would say where a lot of the volume might be concentrated. In this case, it could be 75.25. I mean, it could be 7,500. You're just not sure. And then I think when you do that too, you have to just determine, on the conservative side, the expected move. In that situation, like obviously 7,500 is an area, but are we really getting down to 7,500 today, right? Like you got to think about it in terms of that, and that helps you determine what expiration and which strikes you use. There is kind of a dance, I would say, in putting these on.
I mean, it's kind of fun to use all the tools in your use all the clubs you've got in your bag to kind of set them up. Is it going to work every time? No. Does it make me feel better knowing I've got these levels? Yes. And Jamal, I just looked at the CBOS list. 7,500 is the leading put on the board right now in the 0 day TE.
Sounds about right.
But it's round numbers. It usually is round numbers.
But something you said really stuck with me. Look, I mean, I don't always use all the clubs in the bag. I get comfortable with a couple of clubs. I mean, now that you mentioned it, I don't even use my 3 and my 5 anymore. I'm using the 4 hybrid right now. So this is actually the 4 hybrid. Like ever since Mike gave me this club, man, these things I put these things on quite a bit. These Super Bulls and Super Bears. I honestly never like structured a trade like this prior to us linking up, and like I structured quite a few of these. As I've mentioned, I got a bunch of Super Bulls and the software names. Like it's the easiest way for me to play them and not go completely crazy because of the way that these names have traded. Like it's like very risk defined. I feel I got it a couple months out, and I don't worry about it that much day to day.
Well, the other thing about structuring them a little bit farther out in time, Jamal, is that, if you're going to buy, and I think Mike hit the head on this, if you're going to buy a call spread, sometimes it's like watching paint dry. Even if you get the move up, you're not going to get out. But when you structure it where you've got that put with it, you can get out a lot quicker because you're going to get a little bit of profit potential.
100%.
So, yeah.
Speaking of golf clubs, my girlfriend was like, I need an iron, but I need it to be like more distance because she only had a 7 iron in her truncated bag. So I was like, well, we got to get you a 5 iron. So we went to secondswing.com, my favorite website.
I've gone to global golf, global golf, but I haven't been to that one second. I've heard of Second Swing. Though.
It's really good. I mean, you buy used clubs for 50% off, but they're all like mint condition. You can structure it by the quality of the club, and then you can get it re-gripped. So we got it. She was smashing that club. I was like, I guess I got to buy a new putter now. So I bought a brand new putter.
Yeah, it happens. I learned more about golf from doing that, from buying a club, than I really had. And guess what? I'm branching an AI agent once again. I did use ChatGPT. I told it a bunch of things, and it asked me some questions, and it really did help. Yeah. It's dope.
Yeah, love it.
Have you two golfed together?
Not yet. We need to, though. We need to.
We will.
Yeah, we will.
That's what I was going to say. I was going to see who can swing farther.
Oh, he probably can swing farther than I can. I'm not. I'm learning. I'm easing my way.
Hybrid. He said he's only on the 4 hybrid. Yeah, I think this market is going to be interesting. I want to get filled before this market opens. We got a minute left here. Can I get filled for a 20-cent credit?
So while you're trying to get filled, I do think, I mean, just once again, these are opinions. This should mean nothing, but I think this market might turn around. We do have SpaceX going into the NASDAQ 100 today, but I heard it's only going to be as big as it is, it's a very small portion of the NASDAQ 100 because something about the volume. I'm going to have to ask Chris about this. It's got to have X amount traded before they can put it in as a larger percentage. If that's
interesting.
That's even, because Jamal, I heard you say it didn't move the NASDAQ needle too much.
I mean, not really. I mean, if you saw the 1 minute chart from yesterday, it was just like, it just seemed like a normal type of pullback that you would see after a day where we were mostly higher and eventually pulling back. I don't know.
Yeah, it's kind of crazy.
All right, they're not going to fill me, so I'm going to crank this back up to 30 cents.
They don't fill me. This dude,
just in case we see a little sell off here.
We used to trade with at our job. Turkish dude, he had an accent. He was like, they don't fill me. They don't fill me on my trades. Make fun of him all the time.
Spoos are down 11. I mean, I think we're gonna go green today, Mike, and I think you're gonna get out of this Super Bowl for a full profit.
Oh.
Let me see the delta on your long. Your long delta is a 9, so you got a 20% chance of keeping all of it.
Hey, that's a pretty strong chance. I like that. Oh God, here we go. It's ripping. Oh no.
Yeah. Oh, did you miss it? You didn't get filled?
Swing and a miss. Swing and a miss. It happens. Oh, let's see what's chasing here. Micron. How is Snow up? Oh, you know what? Oh, guess what? It's software update today. That's what it's going to be.
It is software update today. So my question is, if you are cyclical, and yesterday you went into all the Kramer stocks, today are you going to buy the semis that are down? Are you going to be bullish in them?
You were probably already long them. Maybe you closed some yesterday, but you're probably still already long those semis, and you're long those cyclicals. Or maybe I'm just talking about my book right now because that's exactly what I got going on. The McDonald's is working. The Procter & Gamble is working. The Colgate is working. Walmart is working. Microsoft CRM is working. Netflix is also in that space too, by the way. Not space, but it's getting lumped in with all of those things. On the days where semis are down, they come and they buy Netflix, they buy Walmart, they buy Microsoft and CRM. This is a trip. This is not going to last, Netflix. By the way.
I hate Netflix. I hate Netflix. I hate Netflix. I will never trade it again.
Really? You done with it? Why? What did it do? Oh, is this from like a long time ago? Or is this since the split and the way that it's traded since then?
No, it's from a long time ago. I got Netflix and I will never touch it again. It's one of the stocks.
Emotional trader, huh? I didn't know this. Let's unpack this. Why? Is Netflix in the room right now?
Yeah, Netflix is all around me.
Netflix.
It's just one of those stocks that I just don't think it's worth trading. I mean, for those of you who trade it well, great. Ouch. But I mean, it didn't do it, right? It split and then it just continued to go down too, but it did hurt me before the split, but I did watch it after.
It did hurt me before the split.
Yeah, I was looking at the micro NASDAQ here. Still plenty of premium here, so I'm just going to leave this, let this thing decay even more.
Yeah, same. I'm still in that same expiration. I haven't rolled yet.
Yeah. I think we need some more liquidity to fall into the next cycle, or we make an adjustment here. But Microsoft up 7 points right now. Very interesting to see. Love to see it.
Yeah, but yesterday was down 7 points.
Yeah. Because semis are up.
Indeed.
Yeah.
Here's another Super Bowl. 20-point wide put spread to buy a 40-point wide call spread. And we put this on 12 days ago. It's up 1,100 right now. Because you get that, again, you get that speed if you go directionally right.
So you're telling me you're up $1,100 on the trade and you're not taking it off?
No, because this one's 45 days out. We had this one in.
Like, you're so confusing to me. It's not even funny. Like, you're going to take $100.
No, you let that run a little bit. You got time on that thing.
Longer term stuff. You let that stuff run.
You know how down Microsoft is?
Yeah. We've had this one on for 100 days, the 500 strike calendar, but this is a really long-term one out in January, the long option, and then the short options in September. And we bought that for $500 when Microsoft was at like 350, something like that.
The heck is on Costco? I don't know.
Are you going to continue to roll your short?
Yes, if we get to September, then yeah, I'll roll it to October, November, and I'll probably stop at November. Just keep some distance between the short and long option. But I'm playing for this thing to go back to 500 before then. In which case, all of these trades will be nice win. But I was filled on that Super Bowl. It's not looking great right now. 75-20, 75-10 put spread to buy the 75-50, 75-60 call spread. So I moved the call spread in a little bit and I widened the put spread, but still 20-cent credit. So neutral in the middle, and any kind of reversal, this thing will be good.
Any kind of reversal, but we seem to be sliding a little bit right now.
Mm-hmm.
That's probably why you got filled.
Yes, for sure.
Yeah.
For sure.
You get that down view. Looks like
what else are you looking at today? You have anything on your watch list?
I was kind of looking, I wanted to dabble back in airlines, and I kind of looked at those today, and those are really high. All the airline stocks are pretty high right now just because they're kind of following oil. Natural gas is down a little bit. So, I mean, I know, Jamal, do you still have your natural gas position?
Still have it on, yeah. Yep.
So you're down a little bit lower, I think. Well, I have the same one on too, but I have lots of different natural gas positions on. So I always keep an eye on that. I might layer in a little bit more to that. And then my gold came off, my bullish gold position. And like I said, I do like to collect a lot of characters. And I was listening to Tim Knight yesterday. And while he is not bullish right now, he is long-term bullish metals. Okay. So
how did you get him to admit that? I haven't heard him say he's bullish about anything. I'm going to ask him about that today.
Shake him down today. You shake him down because he's coming on this show. No, I don't want to put words in his mouth.
Him longer. He told her, he confided in her. So he's never said he's bullish about anything. Not even dogs, and he loves dogs.
He does love dogs. No, but not currently. He said it doesn't. The chart doesn't say it's going to pop right now, but he's long-term bullish metals. He thinks that metals are going to outperform stocks. Okay. Now, whether that means that stocks are going to come down or metals are going to go up, he doesn't know what combination. But because of that, I redabbled back into my gold position. My put spread rolled off. I always kind of have put spreads in there to just kind of continue to chip away and make money in gold.
He says that to you, and you hear that like, yes, it's time to get long metals. But what he's really saying is the end is nigh. I'm getting long metals. The market is going to crash. Things are over. We're all going to die is really what he's saying.
That's exactly what he said. And I just took the sunny side of it.
But yeah, I'm long silver. I have 100 shares with a covered call there. And then, gold futures, we were dabbling with some short put spreads there. Maybe I'll get back into that as well.
Yeah, the new level seems to be 4,200 now that it's going to dance around.
Yeah. But yeah, lots moving here. E-minis down 17, NASDAQ down 400. The Dow is the only one that is green right now. Interestingly enough, kudos to you with your call diagonal buys, sector rotation.
People have been asking in the chat if you've ever seen myself and Kramer in the same building at the same time. Not really, no.
Coincidence? I think not.
Well, Liz, thank you for your time. We'll see you a little bit later. Appreciate you.
All right. Happy trading, boys.
Yeah,
see you later.
Likewise. But yeah, E-minis are sliding a little bit, down 16. NASDAQ's down 380. We're going to take a quick 90-second break. Join us on the YouTube channel. We're streaming on Tasty Live. We'll see you on the other side of it.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. What do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
It's time to trade smart, post-PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Jamal. E-minis are down 17. Nasdaq's down 360. The Dow is the only of the big four that are up right now. Bitcoin, ETH flat. Kind of a choppy day here, but love to see Costco up to Jamal's happiness. Google up still 3.5 points. Microsoft up 6 points. Love to see it. Seeing a little sector rotation into the software products and kind of out of these chip stocks and into some of those consumer staples. But we do have a very special guest, Mr. Ben, on the line. And Ben, we got to ask you, are you buying a Dell because President Trump said to buy a Dell, or are you keeping your hands
Well, anytime President Trump says something, I feel like I need to respond. That's my best Trump impersonation. I mean, you look at Dell, you look at it on the daily chart, this thing is a bullish flag if I've ever seen one. I mean, it's going sideways. It's consolidating. It's one of those names that does feel like, pretty much any name Trump has been behind, whether it be Dell or Intel or you name it. It's just going to continue to push because he's going to win. He's going to win bigly. So I do like Dell. I do believe that if Dell can kind of break the top of that bullish flag and keep running, I think it could do just fine somewhere where above maybe 450 or so. I think it pushes to 5. But for right now, it's just really digesting that massive move it made between February and May. So at some point, it's got to digest a little bit. I think that's what's happening now. But eventually, I do think it gets back on that push higher.
I mean, within that same space, whether it's Dell, whether it's AMD, Intel, I mean, how are you trading any of these names? Some of the vol is starting to get a little high in some of these options-wise. I mean, what are you looking at doing? What's your go-to strategy in any of these?
Yeah, I mean, for me, I love to have a good risk reward. And so when I look at a name like a Dell, like an AMD, as long as it's in a bullish trend and I can play it at a pretty solid area of demand, previous demand, with a tight stop and a potential for a bounce. I mean, that's really what we've been seeing from a lot of these names, in this kind of, what's it called? The great CapEx trade of AI, whether it be, memory or whether it be processors. I mean, these have just been incredibly bullish names. And so I like to play bullish names in a bullish way with a good risk reward. So I'll look at a name, like Dell or AMD, and anytime this thing is pulled back, to any areas of previous demand, we have seen a pretty good opportunity for bounces. Just saw that on Apple on a previous pullback. And so, yeah, I look at AMD and I think, gosh, if this thing can pull back to that previous demand of about 500, where there's also, just a pretty important psychological level of 500. I could see AMD bouncing from there, pushing back up to the fives. And as long as the VIX stays relatively low, I'm okay playing a directional, call on that. But if not, I don't mind, also playing spreads if the VIX wants to get a little bit higher. And options cost me a little bit more. So that's how I'm tending to play those names. As long as they pull back to some of these kind of key support zones, I like to play them for a bounce with a tight stop.
Beautiful. Yeah, we've been seeing some choppiness here in AMD specifically. I like that 500 call out, like you said. What do you make of the divergence between the NASDAQ? I mean, the NASDAQ, when you think about it holistically, it's all tech, right? But when you look at underneath the hood a little bit, you've got the Mag 7 that just could not catch a bid. When we look at Mags, just the combo ETF here went from 70 down to 60. Now we're kind of chopping in the middle of the range. SMH at the same time is moving in the opposite direction. Do you have any sort of feel for, or do you play this kind of chips are selling off, software is catching a bid, Mag 7 selling off, other tech sectors catching a bid? Do you play that at all? Or are you looking at single names individually?
100%. Yeah. We very much look from the top down view, right? So I like to play strong names and strong sectors. And when we have sectors that are, not really outperforming, not really bullish, I mean, I look at some of the key sectors that have been strong for the past month, and that's XLF, XLV, XLI, the healthcares, the financials, the industrials. So you're right. When I see the Mag 7, compilation there, just kind of chopping along and not showing me a whole lot, then we don't really have the wind at our back. And that's what we typically look for when we look for kind of a top down from those strengthened sectors. Now, you mentioned, SMH with the semis, and at some point we had to see that cool off a little bit. I mean, last year I was looking at SOXL, which is a triple levered ETF on the semis, when that thing went down to $8 during the whole tariff scare. And then it recently hit 300. And so that is a enormous move for a triple levered ETF, especially in that sector. So I do love playing that rotation, but the way I tend to do it is I tend to find strong names in strong sectors, and the ones that have been really, showing out of late is the XLIs, the XLFs, the XLVs, which would make sense when you look at the indices themselves, because when you go to the Qs, we're in chop. When you go to the SPY, we're in chop. When you go to the DIA or the IWM, the Russell or the Dow, we're seeing a lot of strength. And so, XLF, XLV, XLI, these are the names that you would expect, with that type of index rotation, not just, sector rotation. So that's what I'm looking for. I'd love to play strong names and strong sectors.
Yeah, speaking of XLF and financials, I mean, we're literally, I've just realized, 7 days away. I mean, from earnings, coming up. I mean, is there any you're looking to play? Do you play earnings at all? Is there any ways you like to play?
Yeah, we love to play earnings. Yeah, the way we play earnings is a very similar way for the way we try and play anything risk-wise. We just always, our job is risk management. And so if we can find a bullish name like a BAC, we played Citigroup, for example, on a run up into earnings. And so if we can play these names and get some risk capital at hand for a push up into earnings, as we know with a massive, catalytic event like earnings, it's going to push, the IV higher in the options. And so that's naturally going to help it anyway. So if we can play any kind of pullbacks like you see there in Citi, back to previous demand zones for bounces, that's what we like to play, get some risk capital at hand, and then kind of see if what we are seeing with the options market, is it just, are they buying them aggressively? Is it dramatically, leaning put call ratio toward calls versus puts? And then if we can put some risk capital behind that for earnings, then we try and do that, but always with kind of risk adjusted ideas that we got risk capital from on the way up to earnings. That's typically how we like to play earnings.
Yeah, some of these are boasting a pretty high implied volatility. Just getting a quick preview for some of these earnings announcements. Citigroup about 5% in terms of the implied move relative to the stock price. JP Morgan, not as much, down at like, we'll call it 3% here. So there are some interesting, island moves or island implied moves in Citigroup and some others. I would imagine if you look at like Wells Fargo, it's probably going to be a little bit higher in implied volatility. Yeah, about 5%. So yeah, interesting to see JP Morgan not having the same amount of implied volatility as these other two. Bank of America likely in the same boat. Yeah, 3%, we'll call it. So yeah, there's going to be opportunities there, but I think the low, I always shy away from low implied volatility readings like 3% if I'm selling premium, like if I'm doing an Iron Condor or something like that. I'd rather have explosive implied volatility. But directional moves, like this is super low. If you think Bank of America or Citigroup or Wells Fargo or JP Morgan could have a 5%, 6% move from earnings, you're basically doubling the implied move in those situations.
Yeah, and that's what we're looking for. And I completely agree with you. If I'm going to sell premium, I want the IV to be high. But as you say, when you see relatively low, financials has been strong. As I said, DIA has been strong. And so if we can kind of continue to see that strength, then I think that bodes well for, a post-earnings run. One of the things we also like to do is if we don't have a very clear sense of what that's going to be, we know that IV will drop, the minute that earnings is announced, and then can we play a continuation from there in whatever direction it goes.
Yeah, for sure. Well, thanks, Ben. Appreciate your time. It's been fun.
Hey, it's been my pleasure. Thanks for having me. And, it really been a joy. So thanks, guys, for what you do, and look forward to being back sometime.
Cool.
Appreciate you, man.
Sounds good.
Thanks for coming on.
E-minis down 17, NASDAQ down 420. Dow is still the only one in the green right now. We'll see if that changes, but we're going to take a quick 90-second break here. You are watching Tasty Live.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates. Hello, Tasty Nation. Welcome back to the show. We've got the E-minis selling off here, down 22. NASDAQ down 470, over 1.5%. Crazy moves to the downside, but we're seeing some rotations back into some other products that have not been loved as of late. But we got Jamal in the house. We got E in the house. And E, I know you were pulling for the US of A.
Yeah, man.
It's bearish for the market.
Yeah.
Clearly. It's absolutely bearish.
You know
for the
what's
market.
funny? I'm surprised nobody came out with a stat about like what happens after the day the U.S. loses.
That's all I could think about. The game was over. Had to check out what NASDAQ was doing. We were just chugging lower. I was like, there we go. I guess that's the outcome. So I'm not going to lie. It stings a little bit this morning. So I had to size down my position so that I don't do anything too crazy. So I'm putting up the guardrails. But no, with that being said, getting a little bit more volatility to the downside in the overall market. We did see an Iranian attack in the Strait of Hormuz, so that might be a little bit bullish for the oil market for now, which is nice because it seemed like the oil market was stalling a little bit there. I know we got the pretty big down move, but I think everybody was wondering if we were going to get some type of relief pop. So it's nice to see a little bit more volume coming into some of the oil names now.
What? I just paid $3.99 in gas today. I don't want to pay more than that.
Oh, did you?
You want to see more oil up?
At Costco?
Nah, actually, I didn't.
It's too cheap now. You just go wherever
It
you
was
want.
on my way. Yeah, yeah, exactly. I didn't have to worry about it.
Yeah. No, I hear you.
No, you're right. Oil's back above 70. It's been a minute. Honestly, it's been nothing but a slide in oil, and now we're starting to see a little bounce back. We'll see if that really means anything.
Yeah.
It's really something.
Yeah, we've got this straddle here, 76 straddle out 41 days, $850 in premium. So looking good as long as we stick around 70 or higher. At least in the long term, we'll be just fine. So
yeah. No, I hear you. A little bit more air into those names. I know the oil trade was a little bit of a difficult one. I guess if you were on the short side, that was one that really fell in your breadbasket really nice because, I mean, we've been getting downticks almost on a daily basis. So today's the first uptick. I mean, we'll see if it's even going to be sustainable. You guys know how it is with some of these headlines, these quote-unquote fake headlines. So we'll see what sustains with the overall market. But we do have a long futures contract in there. So I think if we make new lows, I'll probably cut losses on that one. But, I mean, it's doing pretty well for the day. We kind of caught it near the lows, and we'll try to ride this momentum a little bit on the day.
I mean, it looks like the beginning of a rounding pattern, honestly. It looks like it might have found a bottom there. So it's probably a pretty decent time to get long.
I mean, after such a large down move, and I mean, man, the velocity of that move to the downside was no joke. And I mean, we were chugging to the upside. I mean, putting in some record numbers on oil, and then I mean, we can just take the whole thing back within just 2 to 3 weeks, just like that. So it's a little bit reminiscent of some of the metals markets right now. I know it's a completely different market, but in terms of just how the emotions felt, the euphoria with the initial move to the upside, and then kind of a little bit more air coming out. So oil market's looking nice. Yeah, gold right there. We tried to catch a little bit of a bid, but I mean, I don't know if this downside action is even over in these metals. So that's something I'm being cautioned as well, trading oil. We don't know if the bottom is truly in. We don't know if this is just another intermediary, just kind of lower high on the way down that we're putting in. So we'll be cautious for it, especially if you're trading a little bit more directional. Like I know whenever you're selling the options, you have a little bit more flexibility. I know that's one reason why you like to do a lot of the options on the futures too. It still gives you that same flexibility to kind of manipulate the strikes, kind of manipulate the position a little bit there too. So that's definitely something to keep top of mind. But with such a directional position, you got to definitely watch out for catching some type of falling knife. So
for sure. Yeah, I think the setup here, I was looking at an out of the money diagonal, 10 points wide, and then an at the money, slightly in the money. And they're basically the same price. So I think I'm going to go with a call diagonal here and just buy the 380 September, sell the 390 August.
Okay.
Pay less than $10 for it. Very similar price if you moved this 10 points further out of the money, but I would rather need less of a directional move and have more than twice as much extrinsic value here in the short. In case we just chop around here or sell off, it'll be a better scenario for sure.
100%.
Yeah, both gold and I guess silver to some degree too, but just we can just keep it at gold and oil. And we saw, I think the research piece yesterday that Julie was talking about how those are some of the worst performers on the month. And I think a lot of people, they look at stuff like that. What was bad on this month, and can you try and get an opposite move going in that direction? And I think that's what you're seeing a little bit with oil, with gold. They're having these rounding patterns. They're starting to have these areas where they fluctuate around. For oil, it's $70. For gold, I think it's about $4,200 at this point. So I also think those areas where you can be, like Mike has, short vol in that, whether you short vol in gold, however you want to do it, like they're going to mess around in those areas. Diagonal works as well, because when it does punch up above, you're able to close it, because it will fall back down. It's still trying to figure out what area it is. It's not the same kind of gold that we saw last year, where it's just straight up bullish all day long, every day, doesn't matter. It's different now. It trades differently. You can see it.
No, 100%. You guys got any thoughts on SpaceX as we get into the rest of this week, or has that kind of been on the back burner since the IPO?
I think exactly that. It's been on the back burner. We have positions, but I day to day, I haven't even looked at the position that often, because it just seems like it's somewhere between 150 and 160.
Yeah, no, I got black tape over my position, so I haven't a bit of time. I had actually bought a naked call on SpaceX. I think I bought it for about $620. The call went down to about worth $2, and then it went back up to $620. I was cutting the loss at break even. I'm out of this one, and then I sold an out of money put spread there. So that one's riding a little bit. It's kind of break even, so we'll be patient for SpaceX. You just had to do it. It's SpaceX, so we'll be patient.
Yeah, we got a butterfly here, 10 days out, 20 points wide. It was just felt it was too cheap. $290 for 20 point wide.
Yeah,
and it's flat right now, but. Also have this long-term Super Bowl, sold a 125 put to buy a 300 call. That one's over a year out. So
that is a long one.
A long one.
Yeah.
Jamal gonna start growing some gray hairs by that time.
I already got some. Errol, it's too late.
I have one. And I don't know how I feel about that. That's what the oil market
worse than you have
I got a couple.
Just rip it out.
Just pull it out.
I don't know. It was like I don't know. I left it in there. It was just like a mark of just I don't know. It was a milestone for sure.
If you leave it in there, it finds others.
That's the very first time when I saw my first beard hairs growing. I was like, I'm never touching this. And I had a full beard. I was like, I don't need a beard yet. But it was like one of those things where it's like, I can grow a beard.
Yeah,
gotta keep it. You know what I'm saying? It was one of those things. So I gotta keep the gray.
Yeah.
This is the an adventure into a man's brain or a boy's brain. One little hair.
You're one of those dudes that's fully gray by 30.
Don't get me started on the chest. I got 2 coming. You think I'm joking? We're gonna keep this PG.
On that note. Thank you, E. Appreciate your insight. But yeah, we're going to take a quick 90-second break. Join us on the YouTube channel. We're streaming live there. You're watching Tasty Live.
On April 14th, the SEC officially approved FINRA's proposal to eliminate the pattern day trader rule, also known as the PDT rule. This is a big deal for many retail traders. For more than 20 years, the PDT rule has been a major roadblock for smaller accounts that wanted to actively trade stocks or options intraday. In other words, we call it day trading. Here's how it used to work. If you made 4 or more day trades within a rolling 5 business day period, your account could be flagged with a pattern day trader designation. To keep that status, your margin account had to maintain at least $25,000. If your balance closed below that amount, your account could be restricted from trading and issued a PDT-related call. At Tasty Trade, they're called an equity maintenance call, or an EM call. The result? Retail traders with smaller accounts were effectively limited from actively participating in markets simply because they didn't have enough capital. Now, that's changing. Under the approved update to FINRA Rule 4210, the PDT designation is being removed, and that means you no longer have to limit the number of day trades you make in a 5 business day period, and you no longer have to maintain $25,000 minimum just to keep day trading in your margin account. In short, as long as your buying power stays positive, you can continue to day trade in your margin account. On our platform, we show real-time buying power, so you can always see where you stand and keep your risk in check. Now, it's important to talk about timing. While this news can be exciting, these rules will not take effect overnight. The new rules will become active 45 days after FINRA publishes its regulatory notice. After that, firms that need more time to update their system will have that additional time, up to 18 months, to fully phase in those changes. So be sure to check with your broker for their specific rollout timeline. And remember, day trading is extremely risky and not suitable for everyone. You must be knowledgeable and experienced to day trade. It's critical to manage your positions carefully and to fully understand the risk of potential loss. We'll continue to keep Tasty Trade account holders up to date as information becomes available. So stay tuned.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We are back. My name is Mike. I'm here with Jamal. You're watching Tasty Live. E-mini's down 30 points. NASDAQ down 480. We've got Tim Knight on the line. And Tim, we've got the microphones.
Yeah.
We can hear it all. We love your dogs.
Yeah.
They're literally yelling at you saying, bring me back to the beach.
They know when you're going on.
Yeah, well, no, they're a room away with a closed door between them, but still the piercing shrieks of a husky cut through. And so we're talking about hair this morning, huh?
Yes.
Is that the focus?
Yes.
And that's what I heard in the last segment.
Oh yeah, Errol, yeah.
Hair talk featuring Jamal.
He's talking exactly featuring me because I have zero at this point in time. I was talking about all his gray hairs. He's got one singular. He's like olive.
Yeah, I'm glad you didn't use that as a segue to come to me.
You look great, Tim. You look great.
Speaking of the aged and infirm, okay, I'm hearing noise, but my tasty obligations foreclose me from checking on what's being destroyed right now. So,
I actually just saw that recently, like this collage on Instagram of like dogs destroying things. I mean, that's the only thing I think. I haven't had a dog since I was a kid. As an adult, I haven't had any. That's the only reason.
Let's see. Here's a Ross Chast cartoon book.
Oh yeah.
You can see the. This is with efforts to try, and this is the one thing in the house you got to. No, this is like one of thousands.
Yeah. I'm sure.
So, yeah. Anyway, besides all that, we've got some charts. We can bang through those a little bit.
Let's do it.
If that's okay. Listen, in the Tasty Trade Statuary Hall, I really want someone to consider putting mine in there, but just because this one thing. I remember distinctly on this very program, on this day here, this bar on June 22nd. I went way out on a limb and said, now's the time to short this one because it was the perfect kiss of that broken trend line. And it hasn't been a straight line down, but it's been a nice little tumble. This is SMH Semiconductors. That was the peak. And we fell and we pushed back to a beautiful gap close right there. Just picture perfect, right out of a textbook. And then another tumble. And the tough thing about mornings like this is like, if there's any bears out there left besides myself, when do you cover? Because obviously at this immediate moment, it seems like a good place to cover because of what's transpired over the past few weeks. I trimmed my SMH options position some, but they expire in friggin' January, so I can't get too anxious about it. That's the challenge. It's a really good morning because I felt yesterday that I was already short tech and semiconductors, but I saw one very striking article that noted that 3 out of the 500 stocks in the S&P 500 accounted for 25% of the gains so far this year. And that's a lot of numbers, but I did the arithmetic, and if I've got this right, it means they have 167 times proportionate effect on there. That's pretty big. It was Micron, it was Western Digital, it was SanDisk. I was already short 2, and just because I'm a nasty little bugger, I'm like, okay, I'll short the third one too, so I short all 3. So anyway, there's just about no semiconductor memory stock that I'm not short. How many rooms do I have to get you away from, girly? Anyway, so it's better than before. Here's just a smattering of things I'm short now. And again, I'm struggling with do I cover, do I partly cover, et cetera. What I'll probably do is just tighten up those stops and maybe partly cover here and there. Marvell, MRVL. Here's another fine example of is the chart helpful? We're getting very close to closing that gap. At least it might be a good time to tighten up positions. You don't know how good your life is. SNDK. This was the one I mentioned yesterday that I hadn't been short already. I was already short Micron and Western Digital. And this sucker went up, and they did a video about this yesterday. It was up 5,000%, something insane, since down here. It was down at 22, and it went to thousands of dollars, for the love of God. And so now we're starting to shave some of that off. And so we've gone on this from, approaching 2,500 down to, it's $1,000 so far, almost. Good heavens. 40% approaching. This is nuts. But it's congratulations to anybody crazy enough to buy puts or something up here, because that was an amazing move. But I think there's a lot more to go. STM, which is ST Microelectronics. Another nice tumble there. All these failed trend lines. I mean, it seems that tech definitely is falling way out of favor, whereas the industrials just keep chomping forward, although even the YM is red now. The YM was at lifetime highs earlier. We'll get to that in a minute. Seagate, STX, another nice tumble here. A lot of these are down 7, 8, 9% this morning. VSH, Vishay Interactive. This is down 9%. So just across the board, if you're short tech, and we were joking during the break about, I'm going to go buy a Dell. That was part of what prompted it, kind of that man standing behind the podium talking about buy a Dell, and stocks are about to. I forget the exact words, but stocks are about to go raging higher. It's really from this depressed base. You think so? If this was 1982, sure, you betcha. At the end of a 15-year bear market, absolutely. But no, I don't think we're poised to go raging higher at these levels. And Caterpillar, of course, weirdly has become one of the great AI plays out there, even though they're kind of known more for their combines and their tractors and such. But because of the hyperscaler build out, they've become kind of the darling of AI, and even they're taking a hard turn. They were at lifetime highs just 5 trading days ago, and so I'm short them too, over 5% down. Micron, another terrific one. This one peaking up here just about the time I think their CEO was announcing a big multi-hundred million contribution to, I think, those new accounts for children, I guess to ingratiate himself. I'm not sure what the idea was, but that was kind of the tippity top of that. So we've cut through the trend line of that. Just anything touching hyperscaling, it's just got a stink on it right now. SMTC, the Simtech core, I don't even know what they do, but they got a nice little top there, falling on this one down almost 9%. And WDC, the other one I mentioned that was had produced such extraordinary gains, that's down almost 10%. The one item yesterday that I made mention of being bullish on was crude oil. And it's up 2.58%. Why was I bullish on crude oil? Well, charts, what else? My view here was that we had closed this gap beautifully. This gap had been created at the start of the war. So basically the gap between, the Friday and the Monday that the war was announced. We fully sealed it a couple of trading days ago and then some. And now we're starting to push higher. It would be completely plausible for this thing to kind of hack its way back up to the bottom of that right triangle. As far as the NQ, we have been range bound for weeks, but it is not out of the sight of realm of possibility that we could cut through the lows we saw, I guess this would be last week, and get out of this range, particularly as people start sweating bullets about the hyperscalers. As far as YM goes, as I said, lifetime highs earlier this morning. However, we're down just a little bitty bit right now. Got a little cute little shooting star there. It doesn't mean much, at 7:15 in the morning, but it's a start. But I have no position. In fact, I have no big ETF positions. It's just dozens of little stocks, mostly with tech. And last chart is IBIT. I reshorted crypto this morning by way of IBIT. And we'll see how that shakes out. It's been a little frustrating recently. We had a big bounce in crypto from about 58,000 to 64,000. We'll see if that gap seal finishes it up. So all in all, I almost said long story short, but that seems too pat. All in all, really good morning. And just the struggle here is when to take profits or just stick your thumbs in your pockets and wait. So I'm just going to have to go through them chart by chart. But really, really good start to the day so far.
Well, you're always the catalyst. I mean, by the time you end, we either turn around or we go further down. So
that's what worries me. That's what worries me. Well, we'll be up plus 70 on the ES at the day's end, because of how these things rock. So God is watching.
One last quick one too. We heard you were bullish of gold.
I'm long-term crazy bullish on gold. I've got a whole series of ratio charts, which, you can conclude that if nothing else, precious metals will greatly outperform stocks for years to come. Whether that means stocks fall or stocks go up less, mathematically it could go either way. But long-term. But no, my only precious position now is I'm actually short GDX, but that's a short-term trade. I think precious metals. If you're like, okay, you got to buy something and hold it for 5 years. Yeah, precious metals, definitely.
Love it. Well, thanks, Tim. Appreciate your time. We will let you get back to your pup over there.
I'm going to see what's been destroyed. Yeah. What's next?
Perfect. E-mini's selling off still, down 45. NASDAQ down 600. Down the Russell, both red as well. But we got Julia on the line. We've got some research for you all. And Julia, what do you think of these markets?
The markets are marketing, that's for sure.
Markets are marketing.
That is
true. Markets are marketing.
And that's the segment, everyone.
Yeah, but are you marketing the markets?
Ooh.
Whoa.
Technically.
Blow my mind.
Technically, a little bit.
Yeah, technically you're marketing the markets for sure.
Marketing the markets, yeah. No,
and by that,
I mean,
Mike has a dual appointment in marketing for those who don't know.
True.
Folks. The speed has been interesting to watch. We're still well within that standard deviation of the typical SPY moves, but the speed of it, I'm going to keep watching it, so we'll see what happens.
Mm-hmm.
This
is really a blip on the map, though. It's interesting, right? We're so used to being up, we see down 50. Oh my God.
Yeah. Although in this market, though, if it flips green, I would not be surprised. I feel like it's been doing that habitually. This market gives me trust issues.
Yeah, it's been interesting because we had a little bit of a sell-off yesterday and volatility wasn't really reacting. Now we're kind of seeing vol pick up a little bit. Still in pretty decent contango here, so I still would lean towards buying the dip here, but definitely a bigger move than I was expecting today.
Crazy to think that this is the dip. I don't know, but little VIX spike. Now we're up to 16, which is kind of crazy. 5% increase gets you to like 16. But yeah, that goes to show you that relative volatility metric, like why we use those like IVR, IVP, because it's relatively high, even though overall levels are low. So if you're an active trader looking for opportunities or looking for, times to sell premium, then that's why we use that relative metric. So that, and that's something we're seeing pretty inflated across all the indices right now. With NASDAQ actually being the highest, I think. NASDAQ being the highest by a lot.
IV rank, you're talking?
Mm-hmm.
Yeah, you're right.
Yeah, makes sense.
Usually the Russell's leading the charge on that one. That's pretty cool, but they're all over 30. So again, for active traders, for looking for, kind of short-term opportunities. That's why we use those relative measures, because, overall VIX levels are pretty low, but relative ones are high when we're looking at it within the context of the last year.
Yeah, that was your grandpa's Russell, not this Russell. This Russell is different.
My grandpa could probably handle the Russell better than I can right now, but I don't know. But you want to get into these slides?
Yeah, let's do it.
Speaking of revenge trades, God did this piece on revenge trading. Basically, when you get emotional and you take a loss and you're like, I'm just going to put more capital in to try to make my money back. What's going to happen? This is what this piece is basically looking at. So, God did this piece. If you want to follow him over on X, he's got Lytics. But super cool piece. It's about, staying consistent and trying to keep the emotions out of it. And especially not, trying to claw back your losses right after you take a big loss. That's kind of like the moral of the story here, which maybe you guys can relate to a little bit, but we wanted to actually test it to see what the numbers say.
Cool.
Yeah, I hope Liz is watching this.
Yeah. She was saying that she has some emotions when trading, but still
some emotions. That's the hardest thing to control. Like the markets, you can't really, you can't control the markets. You can control your portfolio, but the emotions are the hardest thing to kind of keep in check. Sure. So here we're looking at 16 delta spy strangles, 45 DTE held to expiration, again, because we want to look at these tail losses. What I think is important here is that volatility clustering is going to play a really big factor in compounding losses. And volatility clustering is something that you can see on different timescales. You can see that on 45 DTE timescales, 30 DTE timescales, 15 DTE timescales, sometimes intraday as well. So the principle here is really volatility clustering, and that's going to hold true, but we're just using 45 DTE kind of as a benchmark because that's where, the option, like some of the other risk factors of options are a little bit more negated, but just to make sure to understand why held to expiration. And then we're looking at 5 years of daily entries, 2021 to 2026. And then what we're going to do is we're only going to change the trade side after a loss. So if you incur a loss, we're basically going to scale up the amount of portfolio capital that gets allocated to these strategies. We're going to compare that to a fixed size. So say we're either going to put 5 or 10% of our portfolio net liquidity into this position versus doubling it up when we incur a loss. And 5 to 10% we're using because typically you don't want too much of your portfolio in one single position. But if you might have a smaller account, then that's why we're kind of using that 5 to 10% range. 5 could even be very big, if you have a very large account. But that's effectively what we're comparing to versus doubling up the amount of capital allocated right after you take a loss. We're also testing triple and keeping the double. So what we're basically trying to test is if you scale the capital up significantly right after a loss happened, does that make the losses worse, or does that make you gain kind of more overall? Does it drain the account or does it not? And I think important thing to note here is that when the VIX goes up, often buying powers tend to go down because that expected range increases so much. So not only do you double up the amount of net liquidity into a single position, not only are you doubling up the number of positions, you're actually going up more than that because we're using netliq as this benchmark. Does that kind of make sense?
Yeah.
Mm-hmm.
So any intuition here? What do you guys think?
I was going to ask Mike. I think.
It's not going to be good.
Right.
Not going to be good.
No chance.
Speaking
Probably not good.
From my own experience.
Definitely personal experience, whether it's trading or whether it's betting.
Yeah.
It's not. And we have good old Kelly criterion here, speaking of betting. But yeah, it's not good. And other important thing to note is we do have mechanics around scaling capital up when vol goes up, just because premiums are going up and, there's opportunity in that, but it's diversified across positions, not dumping everything into a single position. So important caveat here. I think you guys know where I'm going with this. We could go to the next slide.
It needs to be seen though.
Needs to be seen. Sometimes you gotta feel it too, which is not not fun. But when we're looking at these 45 DTE positions and then managed to halfway to expiration, we can see that when we double up, our pops are still remaining roughly the same, right? Like we kind of don't expect pops to change very much when your position size, or you wouldn't change at all really when your position sizes changes. So kind of aligning with what you see from a strangle, but those big losses get a whole bunch bigger. And that's kind of like what I talked about earlier, is that like you have this volatility clustering in the VIX. It's like when you have one instance of market volatility that's usually, followed by more market volatility. So there's a lot of, when you have this expansion in your broad market indices, there's a lot of opportunity that comes with that, but controlling position size is extremely important. It's more volatile, premiums get bigger, losses potentially get bigger as well. So when you're dumping more capital into the same position to try to claw back losses, right after your first one happens, you're exposing a lot more capital to that market volatility instead of being more mindful of position size, which is what you should be doing especially after you have a big move that can incur a loss.
Yeah. And what you're also doing, and I think this is a great graphic, is if you're doubling down and like increasing your position size and then you're taking additional losses, you're synthetically bringing yourself to that end of the curve with a very small move in the market, where like for you to have a one lot, if you're doing one lots, to have a $2,500, $2,700 loss, you need a massive move in the market because that's your size is correct in that sense. But if you're doubling, tripling, quadrupling your size, now the market only has to go down another 20 points, and you're realizing that same effect as if you had a black swan event in the markets. So you're putting yourself in a scenario where you're gonna have a higher probability of realizing the loss equivalent to a black swan event, if that makes sense. And
Kind of does, yeah.
That's why sizing is so important, because like our MES position and MNQ positions we talk about, like we can absorb 30%, 40%, 50% downside in the markets. But if you're sized too big and you can only absorb 5%, well, you're halfway there today. So like that's the key. You have to be able to absorb all variance if you can do it. Like that's the correct size. If you can absorb all variance, especially to the downside, with undefined risk trades, then you're going to be in a much better spot.
And yeah, that's what we're really looking at here. We're trying to look at, we're looking at undefined risk because we really want to understand that tail in these kind of extreme events. They don't happen a lot, but when they do happen, they can get very bad. And exposing more and more capital to that, not strategically. You want to potentially scale your capital up when you do have this market volatility, but you want to be mindful about diversifying the capital, about being especially mindful about single position sizes in a specific underlying, especially as the market goes down and more assets kind of become correlated to the market during those like high volatility events. Mm-hmm. So scaling the capital up and capitalizing on those higher premiums could be, good thing, potentially, depending on risk tolerances. But being super mindful about how that capital is allocated and not putting too much into a position, especially when you're trying to really claw back losses, that can get really dangerous. So if we go to the next slide, here we're comparing a fixed 10% versus fixed 5% versus doubling down. And again, we're using 5 to 10% here because we wanted to account for different account sizes. So 5% might even be kind of big if you have a very big account. 10% might be, it's a little higher than I would say like the mechanics or the rules of thumb. But if you have a very small account, that's kind of why we're trying to account for those different levels. And obviously the 10% is the most aggressive growth overall, although the most volatile. And then when you're doubling down, that's when you actually entirely wipe out the account, just because even though your pops remain the same, those losses compounding specifically, while they don't happen very often, are enough to really drag down performance overall, such that you actually break even after the look back period.
Love it. Yeah.
Yeah. This is another interesting one. So we're basically looking at what's the probability of doubling a loss. And what was really interesting here is that probability goes up to 90% when you're putting more capital into a trade, right? Because like with more capital at risk, and these not correlated events, autocorrelated events, is volatility clustering that tends to happen. You actually see that you have a 90% chance of doubling your initial loss when you're doubling down on a trade, versus 28% overall. So that I thought was a very interesting one. Again, like these are not very common events, but when they do happen and that tail is something that people are experiencing more, that can be detrimental to kind of long-term growth. So that was a very interesting result.
Losses bunch together just like volatility.
just like volatility, bunching it together. And then again, the deeper the revenge, the worse that it gets. And I think that this is just, kind of moral of the story is that like trying to claw back losses and getting emotional and scaling capital up to try to recover is not necessarily strategic. There are strategic ways to do that, but putting more and more capital into the same position to try to, get a different result can be very dangerous. So I think that's like the most important thing is about staying consistent, about staying strategic, about allocating capital, and especially about scaling it up, being very thoughtful about doing that.
Yeah, I think it's, again, it goes back to the doubling at the wrong time, but also just doubling increases your probability of reaching what would have been your black swan event if you just had one contract size or one tranche of whatever you're trying to trade.
Yeah. I think that's another important lesson about short premium positions is that your pops are high, right? You can get like 60, 70, 80% pops, right? Like, so it's really just consistency is kind of like one of the most important things in my own opinion. Is really controlling those tail losses and trying to stay in the game as long as possible to capitalize on those small, profits over time. Pops are in your favor, right? And it's really about controlling position size and being consistent is like, it's hard to do, especially right after you take a loss.
Yeah, it is.
For sure.
Cool. Okay, we can go on over to the takeaways. So revenge sizing turns some losses into even bigger losers. Doubling really like what we saw, at least in this specific example with the specific underlying over the specific time frame, just completely wiped out a portfolio. And the deeper the revenge is and the more capital you try to dump back in to get some of that money back, the worse those cumulative losses tend to become, specifically when we're looking at those kind of extreme market events. They don't happen very often, but when they do happen, they can escalate pretty quickly. So the moral of the story here is to really just be mindful about scaling up capital and recovering losses in a strategic way. If the statistics are favorable, if volatility is favorable for a specific strategy, then allocating that money appropriately versus getting emotional and trying to claw back with the same position, basically the losses that you incurred.
Size for your edge, not your emotions. That's key.
Size for your probabilities.
Lovely.
Love it.
I like it. Beautiful. Well, thank you, Julia. Appreciate your time. But yeah, always keep that size in check. And really, it can be boring sometimes when feel like your size is too small, but that's actually where you want to be.
Yep.
Because that's when it doesn't matter what the market's doing right now. Like my most confident position is the MES position, MNQ position, because it's just I can withstand anything and I know what to do at certain times. And that's where you feel good about the portfolio that you're managing. For sure.
Yeah. That can also be tricky. If volatility is low and your premiums are low and you're like, hey, I want to scale up a little bit. I don't know, collect a little bit more. It's when volatility is low, overall probability of a vol pop is low, just overall. But the ones that statistically have the worst outcomes for short premium traders are when vol is low. So that's precisely the time you also want to be mindful about not over allocating overall capital into short premium. And then when vol goes up, those rare events, capitalizing on those events appropriately, and just size is just so critical no matter where the VIX is at.
Yeah, 100%. Well, thank you, Julia.
That's all I got.
We'll see you.
Thanks, guys.
We'll see you later. But E-mini's selling off here. Speaking of sizing correctly, E-mini's selling off 45 points, down 0.5%. NASDAQ down 2%. Down the Russell, both red as well. Bitcoin and ETH selling off right now too. Crude oil trying to catch a bid here, up 2 points now, 2.5%. You've got some other single name products catching a bid. Costco's up 9, Google's up 4, Microsoft's up 7. Those are interesting considering the NASDAQ is so red. But the NASDAQ being red is really related to a lot of these semis.
Yeah.
SMH down 5.5%. You've got SanDisk down 200 points. You've got Micron down 80 points. You've got Intel down 12 points, much to my chagrin. But yeah, lots of movement in these markets. We got TP on the line. TP, what are you thinking about today? What do you have your eyes on?
Good to see you guys again. Okay, so we have to bet on America. Why? Because our overall market cap is Well, I saw a graphic a little while ago. Can't remember the specific numbers, but it's about 8 times bigger than the next biggest one, which I think is China or Japan, something like that. The United States market is the place to be. Everybody else is, I wouldn't even count them as runners up. Our Mag 7, the market cap of our Mag 7 is bigger than I think every other country still, and certainly bigger than most. So yeah, this is the place to be. This is where the game is played in the American markets. And right now, what I'm seeing, we get this is, you know, Mike, you were saying what the S&Ps were off a little bit this morning. I'm not sure if that's going to follow through. What I'm looking at in my little heat map here is an awful lot of green, guys, an awful lot of green. Google up, Amazon up, Johnson & Johnson, Walmart, Coca-Cola, Procter & Gamble, JP Morgan, all these stocks are up. Microsoft up after they axed a bunch of people from their Xbox division. Or was that Meta? I can't remember.
No, you're right.
Yeah, they're rallying that. Palantir is up. The stocks that are down, chip stocks, NVIDIA, Avgo, Micron, AMD, that sort of stuff. So yeah, the big cap stocks, particularly NVIDIA, Micron, are down. That's what's pulling the S&Ps down right now. But I see, as opposed to yesterday, there's a lot of green on the map. Over 500 stocks. In other words, across the 500 stocks, there's a lot of green. Some of the stocks I'm looking at, and I don't know what you guys think about this, but GEV, which is GE Verona, what is it called, guys?
I think Vernova,
yeah. Whatever it is. And they're kind of like, I guess, Jamal, I don't know if you're up to speed on what it does. I'm barely up to speed. I think it's where they do their experimental electric stuff or whatever it is. That's down 2 standard deviations this morning, down about 9%. I've traded GEV in the past. Mike, what do the options look like in there?
I mean, they can be wide.
Expensive.
Yeah, well, it's a $1,000 product with 73% volatility. So the options are rich. There's not a huge amount of open interest in there. I would say let's go out maybe to, go out to 38 days maybe, Mike, and see what we look like. Yeah, there's no open interest in there. But just, go in the just see.
I think it's moving this way as a result of Samsung. They're it's a sympathy move.
Yeah, and I see this is it. That's a sneeze, guys. I understand that I love Korea. Don't get me wrong. Kospi is great, but please, what happens? There are 2 stocks that drive the Korean market: Samsung and one I forget. Hysis or whatever it's called.
Yeah.
Thank you. See, Jamal, thank you for.
I know we need to hang every day in life. You know what I mean? We complete each other's sentences. I'm with you, TP.
Exactly. So let's see what we get for a 10-point spread in there, Mike. So I collect $3.40 in there. Again, my metric, very simple metric. If I can collect 1/3 of the width of the strikes on a short spread, if I'm bullish, sell a put spread, bearish, sell a call spread, that sort of thing, I'm collecting 1/3 of the width on here. That's what you get for a high volatility,